Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning. Thanks everyone for joining. Welcome guys, it's almost 7 a.m. We're going to get started in just a couple minutes. I'm just setting up YouTube and we're going to get started.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, good morning. Welcome everyone. Welcome to Stocks Number Trading. My name is Ron. My partner is Dave. It is almost 7 a.m. Eastern and it is Tuesday, August the 5th. Welcome guys. Hope everyone had a great day yesterday and I hope everyone's having a great morning. And we're going to get into the markets. We're going to go for about 3 hours. We're going to go into 10 a.m. and 10 a.m. has some US red folder news. So we'll stay into that and then we'll see how everything moves. That's ISM manufacturing. We'll look at all the folders and we'll talk about it. Let's get started, guys. So welcome, good morning. First things first, we will be doing gold. We'll do a top down on that. Right now it's pushing down to 3,353 right now. And then we'll take a look at NASDAQ and US 30. Yesterday we looked at US 30 first. We did a thorough top down analysis and then we went a little quicker on NASDAQ. Today we'll do the opposite. Today we'll do a thorough analysis on NASDAQ and we'll do a little quicker one on US 30 and we'll get those securities ready for Wall Street. But before we get into any of the charts, let's just briefly go over the news. And yesterday, Monday sessions with us at SST, we go over the entire week's news. We go over the entire week's earnings, try to pinpoint those days that show significant high impact news or earnings with big names. And then on days like this, where we've already done that, we just briefly look at today's market news. Okay, so just looking at today, right now, we've had a lot of news come out of Europe. You can see a lot of low impact news coming out right when London started at 3 a.m. Eastern. You can see that there was some news 2:45, 3:15, 3:45, 3:50, 3:55, 4 a.m., 4:30, 5 a.m. Just after 5, you had the British 10-year bond auction. Lots of news coming out. Low impact, mind you. Okay, so we had some French news, Spanish news, Italian news, German news, all throughout Europe. And if you were trading anything to do with currencies in Europe, just trade with proper risk management, follow your patterns, look for your clues, and hopefully you can get your pips out of London and be done trading for the day. Us, when we're sleeping during that time, we're getting up now and we're getting ready for the North American session. So we're getting ready for this coming over here, 8:30 a.m. We do have some news, low impact news coming out of Canada and the US on trade balance. Then we move into Wall Street at 9:30, 9:45. We have some US final services, PMI, low impact. And then we get into the red folder, high impact news at 10 a.m. This is just right when we'll be wrapping up the call. So if you're going to be trading after 10 a.m., going into the post or later this afternoon, just keep an eye on this folder. ISM services, could be a little bit of volatility at that time. Anytime there is a US high impact, you always have to consider that there's going to be some type of volatility. So, and that's coming 30 minutes right out of the Wall Street market open, okay? And later this afternoon, we don't have much. Then the markets close. We'll have some after hours earnings, and then we move into New Zealand. You move into Australia, then finally Tokyo in the futures session, okay? New Zealand has some red impact folders too. They've got the unemployment rate and unemployment change coming out. Okay, and that's today's news, okay? And what we got to look at is also our earnings. Okay, so yesterday, you guys remember in the after hours, we had Palantir. They hit their first $1 billion quarter, and they were up in the after hours. We'll see how they're doing in the pre-market. But earnings-wise, they did really well. Great earnings. So carrying over to today, we have some pre-market earnings. We have Pfizer just reported right now. If I refresh my screen, I'm sure that they have the numbers out. So Pfizer had a beat on their earnings. Revenue hasn't been reported as of yet. We had a Caterpillar report 30 minutes ago. Disappointing earnings per share. Revenue is not released yet. And then we have a few other names, BP, Galaxy Digital, Lemonade over here, Duke Energy Corp, DuPont, Marriott International. So there's a lot in the pre-markets today. Again, I look for those big high impact names that will have a significant drive maybe on the S&P, NASDAQ, or Dow Jones. And then in the after hours, guys, just careful when you're trading going into the close. And in the after hours, you do have some pretty big tech names over here, okay? And I know some of you guys are shareholders now of AMD. This is Advanced Micro Devices. They're a tech company. They're the semiconductors, their chips, very similar to like NVIDIA. And you got AMD reporting at 4:15 p.m. Eastern. So they might drive S&P and NASDAQ since it's tech. You can see that they're looking at 49 cents earnings per share estimate and a revenue of 7.41 billion for quarter over quarter. So we'll see the actual report. We'll see if it's a surprise, and more importantly, forward guidance. So if you're a shareholder, you don't have to also be a shareholder. You can listen in on the conference call and listen to the CEO and CFO and COO talking about how everything is going with the company. Do they have anything new in the pipeline? What do they expect in the next quarter? So forward guidance are they positive? Are they negative on the future outlook? That could dictate how the price moves in the next few months. Okay, so we have AMD in the after hours. We have Supermicro. This is another one. SMCI is another chip company. Then we have Open Door Technologies, Arista Networks, Astera Labs, Snapchat, Lucid Group, among others. Okay, but the big ones are at the top, and that's AMD and SMCI. Okay, so again, if you're holding any positions overnight into this, could affect the volatility. So just keep that in mind when you are trading that. Okay. So that's we went through the news, earnings. Let's just see some updated news while we're sipping our coffee every morning. What's going on the streets? One key reason a slowing economy isn't shaking stock market bulls. Wall Street strategists say AI resilience is more important to the trajectory of stocks than softening economic data. U.S. stock futures make gains as Wall Street eyes earnings. Again, we're in earnings weeks. Last week was very busy. You remember last week we had Microsoft, we had Meta, we had Apple, we had Amazon. We had some big names last week, and it carries over into this week as well. Big tech is power hungry, and America's aging grid can't keep up. If you want to read any articles here, oil edges down as traders weigh Trump's latest India threat. So Trump again is threatening India oil with Russia and all of that. So the articles are here for you to read. There was a lawsuit. The autopilot verdict deals Tesla a black eye. So this may affect Tesla's share price in the next little bit with that big lawsuit that happened with the autopilot. What else we got going on? Palantir. Okay, so they had their earnings yesterday in the after hours. Palantir stock rises on their first $1 billion quarter. So that's pretty good. Their first $1 billion quarter, probably many more to come in the near future. U.S. tariff on EU goods set at a flat 15% rate. What else we got going on? DuPont forecasts Q3 results above estimates on robust electronics healthcare demand. Oh, wow. Wall Street traders will get a fatter bonus after riding volatile markets. Okay, so Wall Street is going to continue to get richer while some of us are getting more poor. Okay, so Wall Street is making money, guys. Don't feel bad if you're taking some money out of Wall Street. These guys are getting, it says right here, the article, they're getting fatter bonuses. So hopefully we can get some fat bonuses too. That's why, guys, it's very important to study your candlesticks, study your price action, mind your risk management, and hopefully you can get some fat pips these days too. And I know some of you guys are, so congratulations. And that's what we got. Okay, so AMD earnings are on deck. Have investors been over enthusiastic? There's articles. There's a lot of articles for you to read here. Okay, get in the habit of reading these articles with your morning breakfast, with your coffee. I know Netflix is nice to relax and watch Netflix, but this is much better in my opinion because these can help you make money in the long run. Netflix can help you make money too. If you follow what's going on Netflix, you can invest in the Netflix stock. You can buy options on it. Right now in the futures markets, S&P is up 0.25%, Dow is up 0.2%, NASDAQ is up 0.3%, gold is down negative 5%, negative 0.5%, not 5%. Okay, and that's our news in our Discord, guys. A few things came out here just before the call. A long NASDAQ buy had 23,240, is already running about 50 pips right now. So again, mind your risk management. You're welcome to go to a break even, scale out, or just watch right here. If it's going to start breaking this resistance at 23,290, get up 300. If it closes above, maybe a little bit of pullback and continues to ride. This is on the 15 minutes, how it looks, and it's pushing right through that resistance right there. And commodities right here, we're looking for a pullback on gold at 3357 right over here. If it can get back about 3357, 3358, we'll take a look and look for maybe a little bit of a recovery to the upside on gold. Okay. And just moving forward, guys, there is a free Telegram channel pinned at the top for everyone on YouTube. Thank you, guys. We already have 100 viewers. I appreciate that. If you guys wouldn't mind subscribing to the channel, if you haven't already, hit the like button. And this is a free Telegram channel. It's pinned at the top of the channel for you guys. It gives you guys all of our upcoming live trading links. This is Mr. Powell. He's looking at his accountant. This is my accountant seeing that I placed 1,500 trades this year to make a $20 in profit. This is my accountant right here, Mr. Powell. So he's puzzled at how did Ron take 1,500 trades and you can only show for $20 in profit. So maybe I had a lot of break evens. I got to explain to Powell, I had a lot of break evens. Guys, we have blogs available for everybody. There's free blogs. This is Power of Compounding. It's not so much doubling your account. I know in the article it shows like you double a penny and after 30 days it can get up to $1 million. It's more so to show that as you grow your capital, that 1%, if you're just aiming for 1%, I know it's insignificant to start when you're compounding. If you only have a $100 account, 1% is only $1, but eventually maybe that $100 account can get up to 1,000. Then you're making $10 with that 1%. And then if you get it up to 10,000, you're making $100. If you get it up to 100,000, you're making $1,000 with that 1%. Who knows? Maybe some of you guys will get your capital up to $1 million, and that same 1% could be $10,000. So the power of compounding capital, and with your 0.5 or 1% or 2% gains on a daily basis, if you can highly achieve it, a lot of traders can. It's pretty modest. It's not saying we're going to look for 5, 10, 15, 20% per day, but 0.5 to 1% can be life-changing. So that's what that article was referring to. It's not doubling your account every single day, okay? Some of you guys, if you want to try that, try it with a small account. Try it with a small account, okay? And that's our Telegram channel. It's available for everybody. It's pinned at the top of YouTube, okay? And it goes over all of our trade setups and recaps and trade management, okay? And if you want to join the team, we would love to have you guys on Stock Sniper Trading. Join the community here and our Discord. You'll have access to all of our education with myself and Dave over here with all our courses, webinars, boot camps, our super systems of trading webinars where we break things down in more detail over here, and where we talk about everything. We learn all about technicals, fundamentals, price action, risk management, psychology and emotions of trading, strategies, all kinds of stuff, okay? And the free blog that I was just referring to is over here. If you go to more, you click on the blog, there's the power of compounding. This was the weekly market outlook for members only. How to trade the news. Last week was a very significant week with news. We had FOMC, NFP, we had JOLTS. So very, very busy week. How to trade that. We're going to get weeks like this where we're going to have CPI, PPI, GDP releases, all high impact US red folders. So have a sound plan when we're trading these. Importance of wicks in price action. This week we'll talk about the bodies and some securities, Eldorado Gold, Eris Mining. Hopefully we can start to move up with these in a little bit as gold maybe can continue to maybe strive to get to that all-time high. Maybe we'll see these mining companies start to push up again, okay? So that's the blog available for everybody. And I know you guys, what you guys are here for. You guys are here for to get into the charts. And also, guys, we do have Financial Juice news to the left of our charts here. With all of the news around the world. Someone said to me yesterday on YouTube, Ron, why are you not just focusing on US news? Why are you showing global news? Well, the markets are global. So markets are impacted by global news. We can just focus on US news, but we can focus on news coming from around the world. You know, a lot of traders don't just trade NASDAQ or US 30. You know, they're trading other currencies, other securities around the world. So we like to stay updated with world news in the financial markets. Okay, so that's the answer to that question. And welcome everybody. Good morning to everybody on Zoom. Welcome. Red, welcome. Good morning. I hope you're doing well, buddy. Samuel, good morning. DCY, welcome. Danny, thank you. Yeah, big win. 15-1, big win. Daniela, welcome. DCY, welcome. Do I think that instant funding form, any prop firm, is a good deal? If you want instant funding, it's a little bit more expensive in my opinion. But if you don't want to go through the phases and you don't have the time and you feel like you're confident and you understand your risk management, then some traders just go straight ahead right to the instant funding. You know, but it's got pros, it's got its cons. But yeah, if you feel like you're comfortable and you're ready to go to instant funding, just go about it with proper risk management. Okay. Welcome Tuesday. Sang, good morning. Rid, SSDN, good morning, guys. And everyone on YouTube, welcome. Tony Gold, welcome. Habibi, thank you for joining. Adele, thank you. Had a great day at the beach yesterday. It was awesome. And thanks for asking. Rian, Romeo, thank you. Welcome. Crown and Kronos, welcome. Magma, welcome. Good morning, everyone. Okay, so let's get started. Guys, we have a poll going on YouTube right now. If we can get up to 300 likes today, we will give away a free month for our trade ideas. Okay, so that's up to you guys. If we can get up to 300 likes, the more you guys like, the more YouTube will get that algorithm out there. We'll get more viewers and we can possibly hit 300 likes. And a lucky winner will get a free month for a trade ideas to help you out with your trading. Okay. Let's get on with gold. Okay, so remember, we're going to watch that at 357. It's kind of moving away from it, but we'll watch that area. We'll start off with the daily, see how things are moving, and then we'll bring it down to the hourly, and then finally we'll get it down to lower time frames in the 5 minutes. Okay, so most of you guys are familiar. Guys, with the watermark, I made it a little darker over here so you can see XAU USD on the daily, because some of you guys were having a difficulty seeing what security I was trading. And I understand that when I go split screen, it gets smaller. So I kind of made it a little darker for you guys. So hopefully that helps. Okay. This is how gold looks on the daily. We are in this massive range. Okay. It's been multiple months now. It's kind of been in this range since April, and we're in August now. So you can see how long securities can range for. They can range for a long, long time. And so you can see this one big push. We hit the all-time high. Everybody should be aware of the all-time high. I don't even need to ask. It should just be automatic. You should know gold's all-time high is 3,500 US up here, and we hit it on April 22nd. And then since the all-time high, we had the most recent low right over here at 3,120. That's why I placed these orange lines at the top and bottom to let me know the overall range. And that low we hit was May 15th. So we do have some kind of type of consolidation in here. We also do have some blocks and daily points of interest. So I'll help break those down for everybody. Number one block is a supply block that we can see. It started from the all-time high. When we hit that, it came down bearish and it closed right there. Just those two bodies of volume. That's all sometimes it takes to identify a zone. And what strengthens the zone is when you stretch it into the future, and then when the volume comes back in there, you see the type of reaction it has. So it came back in there, it closed strong, but the next day, and then notice the day too, okay? So it's a Tuesday, it's a Wednesday, midweek reversal, okay? We kind of get some moves on Fridays going into the new week on Monday. We also see some moves like this on Tuesday, Wednesdays. It's not always going to happen like this. We could have a midweek continuation. This Tuesday body closed up here, could have opened, retested a little bit, and we're driving, filling backfilling that all-time high wick, and we're driving for continuation. But midweek is normally where markets may make a move. So just keep that in the back of your head. And today is Tuesday. And when bodies close on Tuesday going into Wednesday, just pay attention to that. What Ron was saying, we might have a midweek continuation if the market is moving in a trend, or we might have a midweek reversal. Okay. It's not always, but it's good to keep in the back of your head just in case, okay? So that, in fact, is a double top. Came up there 2 times. It looks like a capital M, and they dropped it back down. If we continue with this in the future, you can see, again, in the early June, we traded back in there, and it got rejected back out. I came again. Mid-June, again, we have this big body candle, Friday close above, and then over the weekend, there was some news, and then they reversed it back down. Again, when you stretch it into the future, just recently we came up here again on a Tuesday, July 22nd, and midweek reversal, they pushed it back down. We came in here, look, we were trading yesterday and today in here, and it's a lower high, and they're pushing it back down. So with this zone, stretch it into the future as far as you want, okay? So when we find one red zone, let's find our green zone. This is the green zone I have been looking at before even everything started. The reason why I was looking at this bullish flag was because of these 3 days down here, where it dipped down and it came down on a Tuesday and pivoted, reversed, back up on a Wednesday, midweek reversal, okay? And it was a big bullish candle coming back up. The second body candle, this one, technically closed above all of this, and this area is kind of, you can see it's resistance if you go to the bodies, and then look at that, all that pullback that came right in there and caught support and went right back up, okay? So that is a very particular zone as well down in there. But right over here, when we closed above, you see, again, that next day, bearish candle come down, hold in here. See how the volume is kind of trapped in that zone? With that box right there, that's all it takes. Stretch it into the future. You could see when that most recent pullback came from the all-time high, where it came in, green box, held, and we continued to push back up. If you stretch this again into the future, yes, there was a daily body that closed below. That's when you make it red zone, and next day open, ignited, and continue push down, where it came into 50% of this bullish body and caught that wick and went back up. Then we started barcoding in here, bearish, bullish, bearish bullish, but notice from the bottom, you're making a higher low, an ignited bullish body, a higher low, and a higher low. So it is ascending from the bottom, creating that strong depth of market to continue to close above the green box and continue our way back up to the red zone. If we stretch this green box all the way into the future again, we have not traded back into this green box. We've been diverging away from it, making higher lows. One clue was right here where we had these two equal bottom lows on the daily right here. This low on May 29 and this low right here on June 30th. So almost 1 month apart, and both of them at month end created these equal lows. That's kind of a clue that the depth of market is holding up and it's not, it's protecting this green zone. And you can look at the price action right now. It's kind of like we're doing a little bit of back testing prior to getting into trading. And we can see it's making higher lows, higher lows, higher lows. It came back up there, but we're not really doing anything above here. There's a lot of sellers here. There's a lot of sellers here. There's a lot of sellers here. So we're going to see if we can continue to work our way back up there. But right now, we have to acknowledge that we're getting rejected, just coming in, peeking our head in that red zone right now, okay? So let's now start to look more at what we got going on over here, okay? Again, points of interest. Right here, where the market kind of bottomed out here, where you got a body and a body and a body and a body around 3273, 3275 area. Good support. Okay. I can also look at 50% of Friday's bullish candle. So Friday was NFP. Job numbers were disappointing in the US. Gold pushed up on Friday. Can we identify where 50% of Friday's candle is? Guys, this is, I just want to show you something real quick. This is the Fibonacci tool right here, okay? You guys see it? This is the Fib tool. So you can see right there, there's that 0.5 that I'm always looking for. And then this is kind of the zone that I'm always looking for, just the one ratio above and the one ratio below. So I'm looking at that zone, right? I'll just make it neutral so everybody can see. And then the Fibonacci has ratios like the 236, it's also got the 786. What we can do, if you want to eliminate those, like what I can do is, watch, I can go to the settings here and I'll go to the style. What I'll do is I can kind of get rid of the 382. I'll make the 382 white. I'll keep the 618 yellow or gold. What I'll do is I'll get rid of the 236. I'll get rid of the 786. I'll keep the 0.5. I'll get rid of the 1.618, and let's see what else. I could just get rid of like the starting and the ending position. Okay, so now on my Fib tool, what I have now is I've got kind of like my zone, what I need. So I can attach it to the top or the bottom, and then you see I'll get my exact zone. Okay. So what we'll do is we'll do it with Friday's daily candle. Okay, so going back to the charts, see Friday's daily candle. Now I grab my Fib tool that I just kind of modified, it's a bullish candle. So from the opening position to the closing position right there, you see how I have now my 0.5 is 3,326. I can place a yellow line exactly right at 50%. And I could also identify my bullish zone or point of control right there and make it green and stretch it into the future. Okay, we might be revisiting this maybe today, maybe tomorrow, maybe next week, or we'll make a higher low and we'll diverge away from it. But if we do come down in here, we're coming right back into that golden pocket right there from NFP Friday, where a lot of buyers were pending in there and have not been activated yet. Okay, so do you guys understand how I just modified my Fibonacci tool to kind of help me identify that zone? So that could be a possible retest zone, right? If it comes back in there, it could come in here and it could bounce back up. It could come in, retest that higher low, and then we're driving, maybe filling those wicks, and then we're driving into 50% of that red zone. Okay, so just building right here off the bottom, that's a good zone to identify. Also, another big zone to identify is maybe I would be looking at also 50% of this big bearish candle that started that engulfing move to start this downtrend coming down. That's an important body to also identify. 50%. It's a bearish engulfing candle and started in that supply zone. Again, from the top to the bottom, see what I did? And you see how my Fibonacci is telling me exactly there's 50% of it at 3,409. And I also can identify the bearish point of control of that body of that candle as well. You're going to see a red zone within a red zone. I know it's probably doesn't make sense to you, but what it is the bigger zone is the all-time high supply zone, and this red zone is representing the candle that started it all. So like, for example, if we were to come all the way back in there, that's where it could get that lower high and reject it back down, right? Unless we can close above this, we'll make it green, and then that might be enough support to get us trading back to 3,450 and driving maybe to possibly that all-time high, okay? But right now, sellers are rejecting the buyers right here. So it is technically a lower high. It's right here at these bodies, okay? So you can see where they're rejecting at this body, at this body. We came up there yesterday, got rejected. We came up there today, lower high, and got rejected. Now we have a bearish body coming all the way down. So are we going to fill all of yesterday's wick and drive into this green box? Or are we going to make a low of the day pretty soon and make a higher low and come back up, okay? So what we also have to do now is start to dissect basically how we were moving yesterday and how we are moving today. So going into Friday, we closed and we opened right here, okay? So those are points of interest. That was over a weekend. Friday's close was right here, very bullish. We opened right here on Monday. So there was no gap up or gap downs over the weekend. It was a clean, steady open from the close of Friday. We opened up and it was initially bearish yesterday. We pushed down, sellers pushed it down where it created a low of the day yesterday. So just that was our fresh low yesterday, but it's also very important because it's our low of the week. That's our weekly low starting on Monday. I know it's early in the week. It's only Tuesday morning, but we still have to acknowledge that that's our weekly low. So we'll see if we'll break our weekly low and maybe this week might turn bearish. Okay. You got to make new lower lows in order to continue to push down. So that's why I'm watching. Are we going to continue to hold up a higher low and maybe push up and protect that weekly low, or is it going to break and come into this green zone? Yesterday, the buyers brought it right back up to the opening position. They flipped the body bullish and we came all the way up to here. I'm just going to move it down just a little bit to represent our weekly high. That is our weekly high. I know it's early in the week, but that's how high it went up yesterday, and it pushed down and it closed right here with a little bit of bullish volume. Now we closed and we opened today. Okay, so we can find our opening position as well. See if there was any gaps or gap downs, gap up. If they needed to be filled, there was nothing. It closed and we opened. It was initially bullish today where the buyers were bringing it all the way up, and that's our highest point of the day. It is actually technically a lower high from yesterday. You can see it's only off by like 30 pips, $3 move from 382 to 385. It's not much of a move, but it's technically lower than yesterday. It's technically lower than July 24th. It's technically lower than July 23. So it is in fact a lower high. Sellers are still protecting this all-time high supply zone. Now we have this big bearish candle get rejected at the highest point of the day, come back down to the opening price. Buyers were not there to protect the opening price. Sellers are strong. They're continuing to push it down. They've engulfed already all of yesterday's buying volume, and they continue to break and push down. They're starting to backfill yesterday's wick. Will they complete the fill? Will they fill it all the way down to this yellow line and maybe break for a new low? Right now, we do have a low in the market. There is already a wick. It's early. We'll see if we can continue coming down, breaking this. Right now, the low of the day is set at 3,351 and a quarter. It could technically break this, drop down a little further, maybe pick up a higher low. As long as maybe it picks up a higher low above this yellow line, maybe it will come back up. But when we're coming back up, mind you, if it catches here this low of the day and comes back up, remember, you got this big bearish candle. You got to kind of push back up against all of this bearish volume, and then maybe get back to this 3362, this yellow line. This could be resistance, and continue to come down. Buyers have to physically flip that and then continue again, pushing all of that bearish volume just to get to the opening price today. So you can tell that today is a very bearish daily candle. It's a lower high, got rejected and pushing down. Okay. So, but we're building some strong support below us, but we still have this zone that maybe needs to be transacted in, and we'll see if this one can hold up, maybe curl it back up, or if sellers are very strong, they might cut through this zone and then close it below there. Then you flip it red and invert it, and then when it's coming back up here, it might get rejected, and then it's pushing back down to test down in here. Okay. Now with our daily candle, what we'll do is, overall just look at some patterns. It's kind of just still consolidating. It's retraced very nicely after this big bearish move coming down. It came back up with NFP, but maybe now it needs to trade sideways. Maybe it needs to transact in this green box, find some new buyers, find some new accumulation, and maybe come back up, unless sellers are lower high and they're pushing this thing down. Okay. Now what we can do is we can go to the 4 hour, from the daily to the 4 hour. Now you can start to see a little bit more how the 4 hour volume, there's your M top, double top, break, continue push down, lower lows, lower highs, lower lows, lower highs, lower low. This staircase coming back up was a lower high, and then they put the elevator coming back down on Wednesday. We caught that sell on Wednesday, and it came back down, held support right there, came back up, pushed down. But you see kind of double bottom support. They put a higher low and continue to build off of it. Then we get NFP. That's NFP 4 hour candle, push right back up, and we pushed all the way back up here. And now you see the 4 hour candle slowly lower highs, lower lows, pushing back down. So we have a heavy 4 hour candle that's going to close in 2.5 hours. That's testing the low of the day. That could technically break and come down to this yellow line. If I look back in the past, we've got a wick of a 4 hour candle, a wick of a 4 hour candle there. If it technically continues to break, we're looking at the top of the green box, 3335, and then maybe 50% in the green box at 3325, and then maybe final support to be at the bottom of the green box at 3318. If you lose that, then sellers could continue to push down. Okay, so right now the 4 hours are still bearish. Like if you consider this whole trip. Okay, let me get my pathway. If you consider this whole thing like as one leg down, and then this whole thing as one leg up, you still see it's a lower high, and this could be the start of that next leg pushing down. But where will it come down to? This yellow line in the green box, will it find some support there and come back up on the 4 hours? Or those 4 hour candles going to close below there and continue dropping and break for a new low? Okay, but really bearish on the 4 hours. Okay, so you see from the daily how it started. Now 4 hours are very bearish. Okay, so if we're looking for buys, we got to find some significant support. This is how it looks now on the 1 hour. Okay, so these are the 60-minute candles. This was Friday, 8 a.m. NFP. You see, since then we pushed up. They maxed it kind of up here on Monday at 10 a.m. They brought it back down, back up, lower high. We got hourly bodies closed below structure. We kind of barcoded for a little bit right here. This was pre-London bearish. London opened up bullish. 4 a.m. back down bearish. There's barcoding at its finest on the hourly. If you can't trade that, box it in. You know that they're accumulating, and it's either going to go to the upside if buyers accumulate more, or it's going to go to the downside if sellers accumulate more. In this instance, sellers accumulated more, and now we're pushing down. So we're pushing down. Look at the bodies. Okay, they're very powerful bodies. The very, very bearish, powerful bodies. They're closing near the lows. Look at with no wick. The next 5 a.m. opened with bearish, ignited, and no wick, and just a drop. So what I would be doing on the hourly is following these hourly candles 50% right there. That first one that kind of started 3369, 3370. Have we retested 50% of that? No. So you can see how strong this is. Bearish ignited, pushed all the way back down, closed near the low. This one at 6 a.m. did pull back up. There's roughly 50%, the yellow line right there. And it's a lower high, pushed down, small wick, filled it, continued to drop. Again, 6 a.m. closed right near the low. Did we come back into 50%? So you see my cut line on the hourly. I'm bringing it down, I'm bringing it down, I'm bringing it down right into 50% of that last hourly candle. I see the buyers just brought it up a little bit, but we still have not contested 50% right here. I don't see any bullish volume closing above here yet to start that push. So we're still pushing down. But this is where we had a lot of 1 hour support. When it came in here, you see a wick. There it kind of made that low, but look where the volume closed back above there. We pushed up. It came back down again here, pushed back up, came down here, and we started that leg up. Now we're pushing down. This hourly candle is going to close in 24 minutes. Is it actually going to close physically with some bearish volume below here? Because all I see is a wick, a wick, a wick. I don't see any bear volume. So maybe we come down here. Maybe we'll pick up a wick and curl back up. But what I need to see is we need to get some more we need to get buyers and start to consolidate in this range right in here. Okay, if we can start to consolidate in here, we might be building in order to come back up. Otherwise, we're still bearish. Okay, so we're going to follow this hourly candle as it's pushing down and as we're going into 8 a.m. and as we're going into COMEX. Okay, and then if the hourly candle drops down to this yellow line, 3345, we might find that's a daily point of interest. That hourly body might find some support like it did over here. If it can't hold there, then we're going to look at the top of the green box, 3335 for some support. More importantly, right in the middle, okay? So that's kind of like where maybe we'll see if we can kind of consolidate, okay? And then on the hourly, okay, so we can see we're pushing down, lower lows, lower highs, lower low, lower high, lower lows. Overall, we are very bullish, okay, from NFP starting from Wednesday, FOMC last week, going into Thursday, Friday. So it's still pushing up, but let's see if we can find some support. Otherwise, it's going to continue to push down, okay? If we look on the 5 minutes now, okay, what are the 5 minutes doing? They're technically pushing down. They hit the high of the day right up here. Since then, lower lows, lower low. They came back up. That's a lower high from all of this. They pushed it. They took out that low, another lower low, came back up, kind of traded around here. Again, all of this is lower highs. They pushed it down. They broke that support, continue all the way down. Lower lows, lower highs, lower lows. And then you can see also like 5 minute bodies have points of interest. Like this big body candle here at 605. You know, if we're looking at 50% of that, it's got to be right around there. We're still below that. You know, we'll possibly look for buys above there. But let's see if we can gain. We're still below 50% of kind of this bearish body that closed below right there. We're still below 3354. Okay. Right now we are, you know, technically in a parallel channel coming down. Okay. So if you kind of connect the dots, right, as accurate as you want, okay, you can see the channel we're in now. Okay. So there's the top of the channel coming down. You know, the dotted line is kind of like the psychological middle, and then the bottom is the support. You can see when it comes down, kind of consolidates at the dotted line, pushes back down, it comes back up one more attempt. There it is at the top of the channel. Big bearish bar, push it right back down. Where does it push it down to? The bottom of the channel. Then we start to barcode sideways. We didn't get that closing volume above 50%, and in order to break out bullish up there, sellers are still strong. They're continuing to push this back down, you know, back down to the kind of bottom. Again, we get some sideways consolidation. Again, we could have saw maybe buyers close it above there and potentially break out, but sellers are still pushing it down. So, you know, RSI is getting really oversold. It's showing a little bit of oversold conditions down at 25. Not just, look how many times it hit down here. Once, twice, 3 times, 4 times now, and it's still pushing down. You know, there is buyers buying, but we still don't have any solid confirmations. Okay, so it is still pushing down. So this is a resistance point right here on the 5 minutes. This is another resistance point on the 5 minutes. You know, this is another resistance point on the 5 minutes up here. You can see how it was support over here in the past. Okay, there it bounced, it was green. There we kind of traded in it, closed below it, it retested it, then dropped. Continued to come in, drop. Continue to come in, drop. Came back in, and it's dropping. It's a shooting star candle coming down, okay? So right now, gold is pushing down, but we'll see maybe will we find some good support at this yellow daily line if we let it come down all the way down here. Maybe we'll find some support. Maybe it might be one bounce up and then it will come back down. Maybe we look for a double bottom or a higher low double bottom to push up, or maybe we just, continue to sell at these red zones. Okay, we'll see how everything is building. And we have a really strong US dollar right now. Okay, so that's gold. What we'll do is we'll add our daily bar indicator right beside us. So there's the opening price right there. We can see when we opened up at right there, 6 p.m., 1800. That was the opening price. Initially, you see it pushed up, it pulled back, continued to go up higher high, pulled back higher low. It tagged the daily high a couple times up there. There's the wicks, and it pushed down from there. So there's where we hit the high of the day, got rejected, came back to the opening price. There's the break of the opening price. There's the retest of it. There's that lower low, come back, and you see how strong the daily candle is, how bearish it is. And we're trading right at the lowest point, basically, at the day. Okay, so we'll see if it can, and it's really, really oversold on the 5 minutes. But you can see the buyers are buying, but then they come into that resistance and get pushed down. Buyers are buying, they get in that resistance and push back down. So kind of got to see it come back up, maybe make some double bottoms, some higher lows, some equal lows, maybe get some closing volume above there, in order to start maybe reversing the trend. Okay, we'll add an EMA. You can see we're consistently below the 9 EMA, so maybe we got to see some bullish volume close above the 9 EMA. And the 200, we are considerably below the 200 EMA as well. Okay, so that's gold. We'll watch it for a little bit, guys, and then we'll do NASDAQ and we'll do US 30 in a little while. In another hour, we'll do those as we lead into Wall Street. Okay, thank you, guys. We have over 200 viewers. If you guys got some value out of that top-down analysis, hit the like button. If you guys are aspiring to be financially free in the near future, hit that like button. If you guys are really improving your trading as of late, hit that like button. And if you guys really want to take your trading to the next level, take it one step further and subscribe to the channel. And let SST help you with all of your analysis. With your, we like to do live trading and analysis with you guys as well. I believe in live education is the best. It's nice to just go back and say, you could have done this, you could have done that, but no emotions are in play when you're doing that. So I can go back and say, oh man, I could have done this, I could have done that all day long. But when you're in a live environment and you actually take buys, you gotta, your stop loss is real. Your take profits are real. There's live emotions. You really have to play it out, so it's not easy to do this stuff, but we enjoy it. And remember, guys, if we get up to 300 likes, we're giving away a free month for our SST trade ideas to a lucky winner. Okay. Okay, so again, is anybody in a buy? Is anybody in a sell? Or are you guys just on the sidelines waiting? We do have 8 a.m. coming up in the next 15 minutes. That's a new hourly candle. Again, what we can do is we can wait for this hourly candle to officially close in the next 16 minutes, right? The hourly candles you can clearly see them. They're pushing down. Lower lows, lower highs, lower lows, lower highs. Okay, so we'll see in 16 minutes where this hourly body will officially close. If you're on the 15 minutes too, 15 minutes are pushing down slowly. They're starting to build a little bit. Even the 15 minutes, look at our heavy oversold. They're down to 22 on RSI. But you still see how this is a tricky indicator. It can get you in a lot of trouble if you just base your buys and sells off that RSI indicator. Okay, so there's nothing wrong with being patient. There's nothing, again, if you want to, like if you're considering a buy, go small. Go for a feeler buy, right? And then if you do get stopped out, you can get stopped out with minimal loss. And then maybe your bias, you're like, okay, it is bearish. I try to buy, but a lot of traders will try a buy when it goes to RSI. where it's below 30, 25, and then they just over leverage that buy. And then it's this little consolidation. You're in a buy, but it's not the profit that you're looking for. And then they just continue push down. And then when you're over leveraged, you're probably going to panic on that move coming down, because that move coming down, just those 4 bars, is almost 70 pips. So, you know, if you're over leveraged, you're going to get taken out of your position. If you're not sure of the bias, always go smaller, test it out. You know, when you go into the water, you know, maybe you want to just get your feet wet, test it out, see, is it warm, is it cold, what's the temperature of the water? There's other people that just jump right in. Okay, that's how you can go about trading too. There's those traders that over leverage and just jump right in. There's other traders that take their time, slowly figure out what's going on. If it goes against them, then they could sell with the trend. You know, sometimes you have to maybe go against your bias once in a while. Okay, but right now, okay, so let's just see. We've created a bottom so far with equal low wicks right there. Okay, just right there on the 5 minutes, right below our hourly consolidation. So have we found now maybe where we found one bottom? Okay, there was a lot of bottoms. This was a bottom, this was a bottom, that was a bottom. But when they went back up, they got pushed down. It bottomed and then they pushed it back down. It made a bottom and they pushed it back down. Here it made a bottom and they pushed it back down. Here again, we've made a bottom. So now we're coming back up to the top of that trend line and back to this red zone. Will they push it back down? That's why I'm looking for a double bottom, maybe a higher low. Maybe can we close with one bullish candle and then we figure out where 50% of it is, okay? And now we're going into 8 a.m. So maybe they're building something to go into the new hour very soon, okay? So let's just continue to watch on the 5 minutes. You know, we're still inside this zone here. Chris, you're thinking to buy at 3350, 3350. We bounced from 3350, should be good support. We had previous buy at 3350. Yeah, it's a nice psychological area. It's a good bounce area. We've got one bounce so far, Chris. So let's see, you know, as we get up here, are we going to break out for a new higher high? Okay, that's another thing I'm looking for. Even an impulse, even a candle that breaks out of here impulsively could, you know, change up everything by creating a new higher high. This is a nice bullish candle, but the wick is still lower than that wick, still lower than that wick. So technically it's still a lower high. So this is a beautiful bullish candle that's going to close in less than 2 minutes. So let's see how it reacts in here, because we can see the 5 minute candle came in here, pushed back down, came in there, they pushed it back down, came in there, they pushed it back down, came in there again. That was a nice big bullish candle, came right in there, they pushed it right back down. So we're coming in again with a really nice big bullish candle, but you can see we're hitting that top of that parallel channel, that trend line, and right back into that red zone here. So let's see how this body will close. Sellers are starting to slow down, Diego. Yeah, if you start to see exhaustion on sellers, then maybe that might give you the go-ahead that buyers could be coming in. Okay, so let's watch this body close in the next 50 seconds. Welcome, Dale. Good morning. Bence, good morning. Welcome. Chris, you made 160 for the day, risking 50 bucks on this trade. That's not bad. 3-1 on your money, a little bit above 3-1. Okay, guys, look at that. Okay, so you see that big bullish candle came right in that red zone again, right at that parallel trend, and look at what they did. Sellers are still there. They pushed it right back down. Here's the closing. Okay, so it did close technically above that 9 EMA. We're opening bullish right now, but it got rejected on that bar, so we're coming back up bullish. Will it have the ability to continue to fill that wick and break out of here? I still don't see any closing bar above this red zone. Okay, so you can still see that the red box is still holding with a lot of selling pressure. Now, will they push this back down for that second leg coming down? And we're going into 8 a.m. in the next 9 minutes. So we'll keep an eye on all of that as well. What am I drinking? A latte? No, it's just a regular Tim Hortons coffee. I've reduced the double-double. I'm down to a regular. A latte would be nice right now. No, it's just a regular coffee. Guys, thank you. We have 250 viewers and there's 150 likes. Again, it's for you guys. If you get it up to 300 likes, we're going to give away a free month of trade ideas to a lucky winner on YouTube. So, and we really want to give that away. So help us get to 300 likes and we'll give back to you guys. Okay, so let's watch this body. Remember, it opened ignited, right? It opened ignited bullish. Okay, so there has been no pullback in this bar as of yet. So it's really bullish. Okay, it came all the way back up. Has it broken for a new high from that previous candle? Yes, it has. Okay, so we got good bullish momentum now. It has technically pushed for a new high just right above these highs, but we're still in that red zone. Okay, so as it did that, it pushed for that new high. Sellers rejected it right back down. So now we got to follow this bullish volume. Where will it close? Will it close inside this red zone? Will it close above the red zone? Or will sellers technically push it down and we close below the red zone? So buyers are there. They're asking to trade up in here. They're there, but just shows how strong the selling pressure still is. Okay, that's why it's important to understand what are the wicks of the candle. So you can see how strong that bullish candle was. Where it opened, ignited, it filled, and popped for that new high. And then those sellers pushed it all the way down, right back down to almost that opening price. And it got saved by those ignited buyers who bought this candle, and they're pushing it right back up. They're kind of like adding more fuel to that candle and pushing it right back up. So it's going to close in 1 minute and 20 seconds. So we'll actually see where it will close. So it looks like we've established one bottom, okay? You know, where it came down, kind of made a V recovery right there. There's our first bottom. So we're now figuring out our neckline in here. So maybe if it pulls back, is it going to pull back right here? Will it pull back to the top of the green box, make a higher low, or will it officially be like a double bottom in there? And then remember what we say, the second leg has a high probability of being a more powerful leg because you get more buyers, and then that will maybe possibly take it to break out of here to the upside, okay? So maybe we're establishing the first bottom. And again, it came all the way back up there again, and they pushed it back down. But notice how it's still holding its ignited open. Okay, so it's still, that's what the significance of a ignited open, what it means, guys. Okay, so we can learn a lot on these calls together as well. That's why education is important too, as well as live trading. Okay, so here's the close, and then we're 5 minutes away from 8 a.m. So they opened 7:55 candle, bearish, ignited, pushing down. Will it hold at 50% of that bullish volume that we just witnessed right there? That's about half of that body, okay? Will it initially hold and then maybe get a higher low and come back in here? Or the seller's gonna just completely break that point of control on that candle and then come down to right here where that bullish ignited candle opens, right there with those strong buyers. So that's where we should get a wick. We do have a wick present. So those buyers who basically bought that last candle are still holding that support, that point of interest. Remember where it closed and where it transitioned into the open. We couldn't hold 50% in order to make that higher low, but we are still technically holding the opening position of that previous bar. But the sellers are still, coming down. It's coming back up. You see the neckline. This is what we call a neckline. This is that resistance. This is like that wall above us that we're trying to break. And you still see how everything is below 50% of this big bearish candle at 6:55 going into 7 a.m. So there's the sellers, how strong they are. Bearish ignited, pushed it down. They took out that strong opening position. Could come down. Will it hold 50% of here? Anywhere to make like a higher low. Otherwise, we're going to come all the way right back down and maybe find bigger buyers in the green zone. Okay. Is this candle going to close bearish engulfing, where it engulfs all of those buyers there? Okay. Now it's coming down. So we've established one bottom. We've established where a neckline is, right? That's why it's important, guys, as well. If you're counter trading, like if you're buying, you're counter trading this bearish move. That's why when we reach a destination, like a red zone, 30, 40 pips if you're in profit. That's why I always say, guys, when you're counter trading, risk management is the most important thing. You should always take your stop loss, go to a break even. If you can scale out in that red zone, that's there's nothing wrong with that, okay? Because you know that that's where the sellers are until the buyers can prove us otherwise that they can close it above there. So if you go into that buy, like on those 3 candles, and you go up 20, 30, 40 pips in there, maybe take some out of the market, right? Put in your pocket, leave the rest running, break even. That's for counter trading. Okay, now you see how it's coming all the way right back down. We're going into 8 a.m. in the next 2 minutes. Our hourly candle, this is the hourly candle. Okay, so it's still bearish. It's got a wick. That's that bottom that we just created right there. So that's kind of these 3 blue candles is representing the wick on the hourly. It's also representing the daily wick as well. Okay, so this could definitely continue to push back down, but let's see if it can hold a little bit here as we go into 8 a.m. Cheslin, welcome. Good morning. Hopefully I pronounced that correctly. Dutch name? So this could be like, staircases going up and an elevator coming down, right? We talk about this a lot. Have I taken a buy? No, I'm not in a buy yet. I'm just still analyzing what's going on. I want to see if the buyers are developing, if they're coming in. I know RSI is in an oversold condition. That was those 3 bars that just pushed up, got it up, the RSI up to 39, and now it's coming down. I don't trade with RSI, but I'm just showing you guys how it can be technically like a false indicator. You gotta use RSI with a lot of confirmations. Okay, so it opened bearish ignited, coming back down into the green zone. So in order for buyers to be here, there's got to be a wick, to flip this candle back up. Where's 50% of that big bearish candle that just came down? I would place it right there at that body to that body and still below there. Okay. Now it's bearish ignited coming down at 8 a.m. So this is where we have, if you look, those low wicks right there, that one was a higher low. That's what built that move coming back up. But now we're coming all the way right back down. So we got to see, will they break for a new low, or are the buyers going to come in and make a higher low? And this is technically where a double bottom is. Double bottom is kind of right here, right in there, if we can hold that. Okay, the sellers are trading right back into it. They could also break this for a new low and continue dropping down. Okay, so you can see how strong that red box is still up there. Okay, now we're coming down. Okay, so this is what I physically watch to see. Are they going to take this out and make a new low, or is it going to hold in here? Okay, so far it came back down in there. That wick technically is above those. Okay, so it's still holding. This is what we call a double bottom now, if it holds. Okay. It could also be a liquidity grab. Remember what we said in the playbook. It could come down here, scoop that liquidity, come back up and close like this, and then take off. Okay, it's still technically a double bottom, but with the liquidity grab, where they clear the board. So it came down in there, it's still holding. Okay. But remember, this bar opened ignited bearish and pushed down. It's representing the new hourly bar at 8 a.m. So it's a strong hourly push to the downside and good flip on the buyers there. Okay, it came right in that green box and flipped. Okay, so it's looking good. Okay, if it continues to go up a little bit, I might be possibly buying this. Okay, I'm going to buy. This is the second bottom that I'm buying, and I'm looking for it to come break through the red zone and maybe get up to that white line, because that's hourly resistance up there. Okay, and then if it can go a little bit further, then we could trade right back into that red zone above us. Okay, so I'm in a buy starting at 8 a.m. I let it pull back down. I didn't buy the wick. It would have been nice, but I just wanted to see if it would hold. And as soon as it came back up, I bought, okay, on the flip. Okay, so that's buying the second bottom. But we're not there yet. We got to continue to get up here and close above this red box. We could go up there and come all the way right back down, right? Okay, so now I got to adjust my stop loss. I'm going to put my stop loss below this entire green zone. Maybe down there. Okay, I want to be kind of below those dotted lines in case it pulls back. I can look in the past below here and see if the 5 minutes ever traded below there. I could be below structure. I just want to follow this candle, guys. Before I do all that, I want to follow this bar. We got 90 seconds to go because this is an important bar. It's representing the new hour. So that's, if you want to learn what a double bottom is, that's what a double bottom is. And traditionally, the double bottom, the second bottom, has stronger buyers because they're pending waiting to buy that second bottom. So it got activated. But we need to close strong. It's not going to do us any good if we just come up here again with a lower high, then sellers will push it right back down. Okay, so we got to close strong. What I mean is closing above here, perfect, would be really good. But we also just got to close above kind of 50% of this bearish candle so we can, in order to build, continue to build to break out of here. Okay, so it came up there. Again, lower high, they rejected it back down. We might lose this bullish volume and then come back down into this green zone. But hopefully we'll see what we can get out of this. It's going to close now in the next 30 seconds. You can see that there's a little bit of volatility. Okay, so it turns now into a spin top candle where it was initially bearish, was really nice and bullish. Sellers pushed it right back down. We're retaining just a little bit of bullish volume. Can we at least close above that red line, above kind of that point of interest? Maybe build off of that in order to continue fill. If we can't, next bar might be bearish, and then we're coming back down in here. And then the selling pressure is very, very, very strong. Okay. So we opened briefly, bullish ignited. So can we get that push? I like when we get a bullish ignited bar with a shorter wick because then it's easier to fill and drive. This one still has a lot of driving to do to get it up there. And then we have to ask it for continuation momentum to get up to that red zone. So it is building nice, bullish, strong opening. Okay, but we got to get above that and continue to drive through here. Wow, lots of resistance up there. Those are equal highs up there, okay? So I hate seeing those when I'm in a buy. 3353 has those equal highs, but see when it came down, kind of pushed again, kind of refueled itself. So can it break those highs and just continue to drive up there? And we also have COMEX market opening up in about 13, 14 more minutes. So if we can just fill to that high point, that would be about 25 pips, just to fill up to the top of that red zone. And then we go from there. So this is like a double bottom where it came down, one bottom. There's our big neckline where we're trying to break above. That was technically the second bottom. And now we're coming back up like a W. So we got to get back above there. You know, if we can get above there, create a new high, close above, we'll flip that red zone green. Maybe if it pulls back in here, then we get some new support, new buyers coming in. And then maybe we can drive up to that hourly white line and grab ourselves 40, 50 pips up there. Ultimately, if it goes up there, we'll be reducing our risk. Well, I will be reducing my risk to eventually get it to a break even and then start to scale out some profit. But we're right back in that red zone. Okay, so we've been rejected here 1, 2, 3, 4, 5, 6, 7 times already. Okay, so it wouldn't surprise me if we continue getting rejected here. We need buyers to continue to ask up here and close strong, close with conviction. Force those sellers to think about their position because all these sellers have their stops here, here, and here. So we got to cut through here, force these guys to get liquidated, the sellers, and maybe we'll add new buyers asking to trade on that FOMO breakout, and you and I will collect some profit on the way up. Hit the likes, guys, on YouTube if you understood what a double bottom buy opportunity is with minimal drawdown there. Okay, so now we're pushing. You know, I always want to see higher highs. Okay, you'll probably see me swear or break something on my computer here if it's a lower high or equal high. You don't want to see that. So let's get this to break for a new high. Holy shit, it's strong resistance up there, man. Okay, we've got 1 minute and 10 seconds to go into the close. Okay, look at this beautiful candle, bullish ignited. Okay, it created the new higher high. So that wick is higher than that one and higher than that one. So we technically created a new higher high. But sometimes when you create a new higher high, it forces the move down because the sellers push it down. But let's see how we'll close, okay? It would be great if we can close with this volume above this body, all these bodies here. It would be even better if we can close right at the high because then we're closing above the red zone. That might be a quick flip. We might get another ignited bar, continue to break. If we have to pull back, we got to figure out where 50% of this bullish candle is when it closes. So this is my cut line, this red line. I'll figure it out where it closes. That'll be my cut point. And then that's where I'm looking to create a wick or support off this body. Beautiful push. Wow. Okay. This is a, oh shit. This is a good push. Okay. 27 pips up there. And look at what we're trading into. 50% of this big bearish body that held everything down just prior. Okay. Here we go. Here's the close. Okay, right there. So 50% of it is technically right there. We didn't close above the red box, so I technically cannot make it green. It's still red. So sellers could bring this down. So far when it came down, we got a higher low. It's a shorter wick. So if we can just fill a little bit, we can fill that wick and start to pop a little higher. Then next location is right here. This point of interest, 3355.36. Right up to that red line right up there. That would be about 36 pips up there. Okay, so that point of interest. Okay, so the reason why I didn't make this red to green yet, because that body technically did not close above it yet. Maybe this one will be the one. Trump reiterates allegations that labor statistics were rigged. He just doesn't stop. And we're trading the hourly candle. Remember, we bought at 8 a.m. So this is like us in this candle, this hourly candle, which is going to close in 48 minutes. But maybe it's kind of made an hourly bottom at the low of the day. So let's see if this hourly candle can push maybe to 50% of the previous hourly candle is that white line for the total of like those 45, 50 pips up there. Okay. And we're also counter trading, guys. Don't forget that. Okay. So we're counter trading these big hourly pushes down. So it's not bad to take some profit out or go to a break even. There's our next push up. Okay. So you don't have to keep your stop loss when you're up 30, 40 pips, you know, like, right there is about 30 plus pips, 35. Okay. So I'm going to reduce my risk now. I'm not going to a full break even. I'm keeping my stop loss just below that body because sometimes it retraces down, it hits me at break even, then it drives. So my risk is this right here. I'm 5 pips risk. That's it. I don't mind losing 5 pips. Okay. To me, losing 5 pips is basically like a break even when I'm trading, but that's just for me, guys. Okay. Because sometimes when I go to a break even, it comes down, it hits my break even, and then it goes up like that. So I'm giving it a little tiny bit of room to breathe down there if it has to come down there. But I've reduced my risk substantially on that trade. Okay, because remember my stop loss was below here. Didn't even encounter any stop loss, nothing. Okay, so yes, I'm pissing away a little bit of profit up there. I didn't do my 80-20 rule. That might come back and haunt me. But now we're testing 50% of that bullish candle. Okay. So that was kind of like the impulse breakout. And again, sellers are pushing it back down. So let's see if we can retain some buyers, get a wick somewhere around here at 50%, a little bit above, a little bit below. Man, that's a nasty candle. So you can tell how strong this is. Shit, I might get stopped out at this. Fuck. Strong selling pressure. As soon as Trump starts talking, holy shit, guy, this guy needs to shut up. Fed Chair Powell is highly political. Powell is too late to cut rates. Warsh is very good. Both Kevins are very good. Many Fed candidates are very good. 2 other people aside from the 2 Kevins are in mind. It will be 1 of 4 people. This is now Trump talking about replacing Powell with these guys who are named Kevins. Every time he opens his mouth. Every time. It's like when we get in a trade, he's got to open his mouth. Oh, man. Okay, guys. So that would have been a break even. Again, remember what I told you. I just have a stop loss of 5 pips. So I'm possibly going to get stopped out now. And I just gave away 30 plus pips to the market. Mr. Trump heard us trading, so he had to ruin it. Asshole. Can't take this guy. That's the Trump effect. Oh, we got a good wick. See, I called him an asshole, so we got a wick. When you call Trump an asshole, you'll get a good rejection wick. You got out of the red box, Chris? Nice. That's good. Hey, I just called Trump an asshole and we got a good wick. Okay, maybe that's what we got to do. Yes, Trump, you're an asshole. Everyone, call him an asshole. Maybe we'll break out of this. Okay, look, guys, we closed back below that red zone, so it's still a red zone, you know. But look at where it closed. They closed at about 50% of that bullish candle, okay? I'm a very technical trader. So if we can get a higher low, maybe we can continue to make our way back up there. I'm not in drawdown, but I'm giving away majority of my profit here. Yeah, Trump didn't like we called him an asshole. Again, we got another wick. Trump, you're an asshole. Yeah, Colmex, guys. Wow. Okay, so Colmex is going to open in 3.5 minutes. Man, I'm flirting with my getting stopped out of this. But maybe who knows? Maybe we can get a quick little flip up here and Colmex, breaks out of here. But highly unlikely. Trump is talking, so he's powering up the US dollar. So gold will probably come back down. Maybe it will retest back down in this green zone. Okay, so I haven't eliminated this green zone. It might come back in there. I'm just reducing my risk in the trade. That's all I did. It could definitely come back in here and pick up stronger buyers in here and then go right back up. Okay, but we've got a higher low. All we got to do is kind of continue to close strong, and maybe we'll get that breakout. Okay, so that was a good pullback, but let's see how we close. And Trump is an asshole. The more we say that, yeah, keep it going. Trump is an asshole. He lies, he cheats, he rigs the markets. Fuck him. Let's go. Let's close strong up here and let's go. Maybe we're squeezing Donald Trump right now. Donald Trump and his cronies. We're squeezing them. Fuck the billionaires and let's get some money for us to eat here. Don't do it too much. Okay. Don't do it too much. I know YouTube might shut us down. Dave and I were flagged last week. I think I said something stupid. They don't tell us what we say. They just give us warnings and they give us red flags. I have no idea what I'm saying on these things, but YouTube, I guess, is censoring us and they're listening in. Okay, but guys, we're going to the COMEX. We might close with some good bullish volume above here, and we might squeeze shorts in COMEX. This would be unbelievable. So I held that pullback, and I told you guys, I just kept my stop right there. It's not at a break even. See, if I kept it at break even, I would have been taken out. I did not. So I told you guys, I just kept it 5 pips, and I'm still in this trade. Had I been break even, I would have been taken out. Okay, so let's see the close. And it's going to get pretty volatile. Okay, guys? So just know that. Okay, here we go. Wow, creating a new high. If we can close above here, guys, go through the motions, okay? Because everything is going to be quick. If we close with some blue volume above here, remember this red zone, flip it green. Okay, we got 40 seconds to go. Wow, okay. You can also, if you guys want, you're back in profit, 35, 40 pips up there. You can scale out if you like or ride it. It's up to you, okay? But we did create a new higher high. We got higher lows, higher lows, higher lows. Beautiful push. We're squeezing Donald Trump right now. Wow. Okay, so there's the close. I'm going to assume we're closing above there unless something dramatic happens. Oh, no. Okay, we did close above. Quick wick flip. We've got a quick wick. Okay, can we flip? Can we hold this? Now, you see how I made it a green zone? We're trading into it. We've got a wick. Perfect. Right at about 50% of that zone. That's where we want the wick. Okay, now all we got to do is just continue to push up, fill that wick, and drive. And then we could get maybe possibly 40 to 50 pips out of this. Okay. So we're still holding. Look at where my cursor is. We're still holding that 50%. Just got to continue to ask up here. And let's see if we can break through this. You guys are welcome to do what you want to do if you're in profit. Don't listen to what I do, okay? I trade a little bit different than you guys, okay? So you do what you want. Benita, you're holding stop loss at break even. Okay, yeah, nothing wrong with that. Okay, it just if you get stopped out, it's just a break even. Okay, don't get rattled by it. You didn't win any money, you didn't lose any money. It's all good. Okay, so we're coming back. We hit that wick again, that resistance coming back into the green zone. Okay, so we flipped it green for a reason with that closing body. So right now, COMEX, you got the buyers and sellers, the indecision. Oh wow, Trump. Tariff of 35% on EU if it doesn't meet obligations. Holy shit. Okay. So he's 35% is serious tariff percentage. It's not 10% or 15. 35 is high. Wow. On the EU. Holy shit. Okay, come on, just get up there. Create that new high. Get it above that wick, that red line. Let's go. Okay, come on, come on. So this is our refuel. This is the next leg up. Let's go. Let's break. Up to that hourly position right there. That's about 45 pips. And then our next red zone is right up there, okay? That next red zone could be about 60 pips up there, okay? If we can continue to break above this, 3356, okay? We got higher highs, higher lows. See how it retested 50% when we flipped the zone green? Perfect. Guys, I'm going to take out 80% of this because Trump's an asshole. So I need to get some money out. I'm taking out 80% right there. I'm leaving 20% running. Okay. So I just secured 80% at 50 pips. Okay. Trump's a prick and an asshole. I think we squeezed them. Okay. Guys, hit the like buttons. If you had some fun, you had some entertainment before we get shut off on YouTube. Hit the likes so we can keep growing and then YouTube can't shut us down. We've got enough strikes. Okay, guys, so I secured 80% of those 50 pips. I got 20% running. Let's follow this candle, okay? So if we can close above here, we might be using this white hourly resistance as support to continue to break up to this red zone. Sorry, guys, I got to behave, okay? I apologize. I got to behave. Ron's getting a little silly here. It's all jokes. It's all jokes. People take shit too serious. It's all just jokes. Relax. Don't get your panties in a bunch, guys. Come on. Just relax. Take a deep breath. It's all going to be good. Okay, let's follow this body of this candle, okay? And you guys, please manage your risk, okay? That's all I ask for you guys. Because we're approaching another big red zone up here, okay? We're still counter trading. This is a counter buy, okay? But we walked into it perfectly. double bottom, started at 8 a.m., hourly transition, going into COMEX, unbelievable, okay? That's a textbook scalp, if you ask me, in my opinion. And I've scalped a lot of trades. So pullbacks down here, wow, there we go. Ignited open and a push right to the top of that red zone. That's 70 pips, guys. Wow, okay. So I'm going to close out another 10%. I got 10% running, 70 plus pips. I'm taking out an additional 10% and leave final 10% running. Holy wow. Okay. 75 pip total trade, guys. Hit the likes on YouTube. We almost have 300 viewers. Let's go, guys. Come on. That was a perfect technical trade. We waited. We saw the move up to the neckline, came back down. That wick said, that's go time. Let's get in it. Let's go. And appropriately place the stop loss below there. When it started to close above, reducing risk, taking some money out of the markets. And that's a daily goal, guys. That's it. I don't even need to trade anymore. That's it. I can go right to the beach on the jet skis right now again. By 8:30 in the morning, people think I'm crazy. But that's the beauty of trading when you know what you're doing. Some days are better than others. I'm not going to lie. But patience and discipline pays off. If we close above this red zone, we're going to momentarily flip this one green. This thing could still continue to squeeze sellers. But if there is going to be pullbacks, your first line pullback would be right here, 3356, and then back down to that green zone, and then where everything started. Guys, we basically bought the low of the day. When you look at the daily candle, that's what we just bought right there. The lowest point basically of the day. Yep, awesome. Discord is running in profit. Fantastic. Let's see. Let me just refresh here. Did it get updated? Perfect. Yeah, 3350. Okay, 50 pips. Excellent, guys. Okay, so let's watch how this body is going to close now. Samuel, you're holding stop loss in 40 pips. Perfect. Awesome, Diego. You learned more with us in a week than others in a year. Thank you. I appreciate that because SST, we work hard to make sure you guys are learning. Okay, we take that serious. Excellent, guys. I'm very, very proud of you guys. Honestly, it takes a lot of hard work to learn trading. It's not easy. This is probably one of the hardest things to learn because it battles with you financially, mentally, psychologically, emotionally, stresses the fuck out of you. It's not easy to trade, guys. I'll be completely honest with you. This is one of the hardest things to do, and I'm very proud of you guys doing this. But guys, don't forget, okay? Look at how bearish it is. We got a beautiful move, but it's still countering, okay? So don't get greedy. Just use like a trailing stop loss because eventually this could come tumbling back down. But if we do close above, we're going to flip this red box green and take it one step at a time, okay? Our next daily position is this yellow line, 3362, 3363. If we get up there, that's a daily position, okay? So it holds more weight than an hourly. It holds more weight than just a 5-minute resistance. This is a big daily position, okay? Sherwin, you got funded yesterday. Congratulations. That's amazing. Congrats. That's huge. Okay, so guys, again, our job is not done. We got to continue following the volume, right? I know it's exciting when you get in profit and things like that, but you got to continue following. Okay, so what is our next job? You guys educate me. You guys teach me. If we close with volume above, let's move this green zone to green, just like we did this one. See when it came in 50% and we got that move. We might get another quick move. We might close near the high and it might open ignited with no wick and continue moving without even retesting this. Okay, 25 seconds go. We're at 85 pips right now. If it can reach its destination of that yellow line, that's 111 pips up there, guys. Okay, I'm not saying it's going to get all the way up there, but holy shit. Okay, look at there. We have big resistance right there, 3361. Okay, so I'm going to assume it's going to close above here. I'm going all ahead of time. Red to green. Wow, we're closing right near the high. Ignited, pop. Fill that wick. Let's drive just a little further. Oh, man. Stretch these zones into the future for later if you ever want to buy a pullback coming down. This is a shallow pullback, testing this. This is a deeper one. This is the best one at the low of the day. That's where we got in. Okay, so if it can continue, where's the cut line of that bullish candle? It's like right around there. That's about 50% right there. So just above that green zone. This is where you can manipulate it, move it up a little bit. We got a perfect higher low push. We're driving, guys. Wow. So all those shorts got squeezed. That's 100 pips. Okay, so I'm closing my entire trade up there. The remaining 10% I'm getting out. That's a 100 pip monster. Normally I'm scalping for 20, 30 pips. You don't see Ron nailing 100 pip trades too often, okay? So 100, that's it. I'm out. So I'm out of my entire position. Took out 80, 10, and 10. There it is. Holy shit. You hit that yellow line. Wow. Lee, daily goal hit. You're going to bounce. Amazing, bro. Lee, amazing. You're done trading at 8:30 a.m. Eastern. Holy. Next red block is right there. That's what runners are for, okay? Let runners run if you have to. But, man, holy. Kels, you're up 2%. Good job. Okay, guys. So, we got a wick at that yellow line. Not surprising. Wow. Samuel, you got your full TP hit. Nice. Good job, guys. Congratulations, everyone on Zoom. Congratulations, everyone on YouTube. Hopefully, everyone managed their risk correctly. And good job, okay? Do you guys want me to go over that, why I took that buy, or you guys all got it? I think I explained it pretty clearly. Just being patient, disciplined, waiting for that second bottom to come in. RSI was really, really low, but you see how it kept trapping buyers. We bought at the perfect opportunity. Second bottom. We didn't just buy it like a dead cat bounce. Okay. And look at now the RSI. It's getting up to that 70 point. This is where you might see it, selling because it's getting a little bit overbought. But it could also drive and squeeze, right? So, again, if it closes above that yellow line might turn into momentary support, catch a wick, and continue to drive up to that red zone. And there's your big 200 EMA right above that red zone, okay? So, some of you guys use that indicator. That's a big indicator, that 200 EMA purple line right above there. If it gets up there, that's about 150 pips. And then surely you guys are going to be taking some profit out of the market. That's 120, okay? We'll stick with gold for another 10, 15 more minutes, and then we'll move on to NASDAQ and US 30. Emmanuel, congrats on the trade. You didn't take it because you don't trade on gold before COMEX. Hey, Emmanuel, I understand. You got rules. I got rules. I completely understand and respect that. No worries. There'll be another trade after. There'll be trades at Wall Street. Emmanuel, you know how it is. But just stick to your rules. That's discipline. So I respect that. Okay, guys. And our Discord signal, okay, at 3350, adding the position. Okay, remember we were looking at the original buys at 3357, but then we looked at the next block below us, found that, and a little 0.1 can net you $127, okay? Not bad at all, okay? So good job, guys. And just looking at news, what do we got? We didn't even look at the news today. Okay, so we got the Canadian and U.S. trade balance. Guys, remember at 10 a.m., ISM services, red folder coming in just after Wall Street, okay? So we'll stick with gold for 10 more minutes, and then at 8:45, we're going to be doing NASDAQ and and sorry, NASDAQ and US 30. Thank you, guys. Almost 300 viewers. Come on, guys. Hit the subscribe button. If you're not subscribed yet, I don't know why. You should subscribe to the channel. We offer free financial education daily. We're here. Like, if you understood that, hit the likes if you want to be financially free. Hit the likes, okay? It shows me that you guys really, really want to learn this stuff. And then it inspires us at SST, myself and Dave and others, to continue to come on YouTube and do this for you guys. We do not get paid from YouTube. We don't get anything from YouTube. I don't want to embarrass YouTube online because that won't be a good idea to do that. But we're here for you guys. Okay, we put in work with you guys every single day, and all we ask for appreciation is a like, or subscribe to the channel, hit the notifications. Because I'm telling you, when it gets a little cooler here in Canada, when the sun goes down and it gets cold, I'll be in this room all day, every day with you guys. Wow, look at this move. Okay, so we closed right at the yellow line, and look, it's still bullish ignited. Continue to open up and drive up there. Wow, okay. So, this is a strong move that came out of there. Holy, okay. That could be a complete total, like 140, 150 pip move up there. Wow. With basically no drawdown. Okay. So, that when people say drawdown and things like that, that encountered absolutely no drawdown where we kind of bought in. But guys, did you see what I did today? You know how I always get tagged at break even? Learn from this, please. This is a good lesson for everybody. When I always get in a trade and I go up like 20, 30, 40 pips, and then I go quickly to a break even? Today, did you hear what I said? I've been tagged out of break evens lately. I've been looking at my journaling. I've been seeing what I've been doing. So today, I kept breathing room. I told you, 5-6 pips of breathing room. That nasty candle, when Trump started talking, came down there. It was looking for me. But I didn't play the game. I learned from my mistakes from going to a break even too early. So I left it. It didn't get tagged. And then it turned into this type of trade. Okay. So, it's nice to go to break evens, but it's also, you got to understand, if you go to a break even, it could come down, hit your break even, and go without you. That's when I showed you that arrow. It would hit the break even and go without me. So I opened my break. My stop loss was down in here. Okay, so I've substantially reduced it, but I still would have lost 5-6 pips if I got hit. Again, 5 pips to me is basically like a break even. So let that be a lesson, guys. If you're getting a lot of break evens and then you're reviewing your trade and you're seeing it's going to TP, maybe do what I did there. Just manually adjust it where it's not technically a 100% break even. Maybe you're giving it 5 pips. So if you get stopped out, you do lose 5 pips, but you got to learn from your trades. That's me learning from hitting break evens. You got to learn, guys. Like I'm learning every day, you're learning every day, we're learning together. Trading is ongoing education. When you say you know it all, that's when the market is going to come and destroy you. Control your ego, be humble, be a student of the game, and continuous learning, okay? These markets are very dynamic. They're moving very fast. You can see Trump over here is speaking, and he moves the markets. So we got to trade properly, okay? And this is the summer months. Normally, June, July, and August are the shittiest months of trading. And this has been the best summer I have ever seen in years in the markets. I'm saying that truthfully, and I've been trading for 20 years. Wow, guys, look at this. 150 pip, 140, 50 pips, that 200 EMA. My goodness. Okay, if you got a little bit of that, that should be basically maybe a daily goal for most of you guys. I don't know how many pips you guys want for a daily goal, but when we say 50 pips is a really good daily goal, 100 pips is an excellent daily goal, 150 pips should be exceeded your daily goal. Intraday trading or scalping the markets. So just keep in mind, we still have this big bearish volume on today's daily candle. That's us coming up on this big wick. Okay, so at some point the sellers are gonna step in and reverse this back down. That's where we came in right into that upper red zone, 200 EMA, and now it could be coming down. Okay, it could pull back and continue to go up, but that's a big TP area. Okay, so hopefully you guys got some money out of that. You guys learned from that. Again, all these red lines, if they're redundant, like if there's too many of them, you can remove them, tidy up, clean up charts, focus on your bigger levels. Okay, this is a zone, that's where it all started right there. See how it's still holding this yellow line? Maybe it will consolidate, flag up here, maybe it will break out further. But we've kind of retraced all the way up to here. So this could be like a big double top, guys. Okay. What I mean by that is, like you can consider this to be one top when it pushed down. It's kind of, we just kind of reversed it all the way right back up, and it's coming right in there. Sellers could push it right back down to this block, down to that block, all the way down there. Maybe push for a new lower low. However, if it comes down there and picks up a higher low, you watch to see, will it close above there, pull back, and then maybe drive even further up. Okay. But I think we've done enough with gold today. We're going to move over to indices now in the US stock market. I think we have enough time now today to do a thorough analysis on both of them. Guys, I'm out of this trade completely. I'll leave it up for you guys. Some of you guys might be still holding it. Some of you guys scaled out. Some of you guys manage your own risk, okay? I got to manage my own too. But I'm no longer in this trade. So we're going to shift focus over to NASDAQ and US 30 now. We're going to do nice top down on them. It's only 8:40. We still have about 50 minutes to go till Wall Street market opens up. So we got a lot of time. If any of you guys need to take a break, go to the washroom, grab a drink, grab a coffee. This is the time to do it. Kels, you're welcome, brother. You're welcome. I know how long you've been working at this, Kels, and you deserve all the blessings. So congratulations to you, bro. I know how far you've come, and it's amazing, guys. Dave and I get to watch you guys and your journeys. Like we know you guys like brothers. So it's amazing, guys, to see you guys, what you guys are doing, what you've overcame. Just continue, stay focused. That's all I can say is just stay focused. Stay consistent. There's going to be days in the markets. The markets will be against your analysis. It will be against your bias. You're going to take some losses, but don't let those days rattle you. Don't let those days affect you. Just walk away from the markets. Do what I do. Go for a walk and then come back later. Come back with a clear mind. Because once you start getting angry, once you start getting mad, you're going to start getting into that vicious cycle. You're going to start revenge trading, hedge trading, adding lot sizes, going against your plan, not being patient, not being disciplined, not waiting for retest, and then you've completely screwed it up again. So just stay focused, guys. If you finally got that ball rolling, stay focused. This is where you have to be really laser focused right now, is to continue to get it rolling, okay? And you can see how the yellow line is momentarily holding the daily point of interest is holding these 5 minutes. So we're in maybe a bull flag, and maybe it will continue to break out. Okay, let's just move over, shift focus. We're going to get started with NASDAQ and US 30, guys. Okay, so I trust that you guys can manage those trades. We're moving on. So let's just hit the likes buttons right now. Hit the likes, please. And let's just continue moving on. If we hit 300 likes on today's stream, which I think we should get, we'll give away a free 1 month for our trade ideas and trade setups, okay? And they are very helpful, help you looking for some possible trades. Let's start off with NASDAQ. Remember yesterday in the after hours, we had Palantir have their earnings. Were good earnings. Let's just see how Palantir is trading right now in the pre-market. Palantir is up almost 7% in the pre-market right now. So they're following their after hours earnings yesterday. So Palantir stock pops, Pfizer beats, Caterpillar warns of tariff impact. Okay, so that's in the news right now. And let's do a top down on NASDAQ. We're going to start off with the daily, okay? Start off with a fresh chart. Remember, guys, NASDAQ is heavily weighted with tech-related securities, okay? Not all of it, but about 60% of NASDAQ is tech-related. So if you're following your tech-related securities, you could be following the entire NASDAQ index, okay? It's a little different from Dow Jones, which is kind of basket case of basically everything, all sectors kind of showing the overall snapshot of the U.S. economy. But NASDAQ is basically how tech is doing, okay? So this was a previous all-time high back in December of 2024. This was a second top when we tested that all-time high in February of this year. And then we had that significant sell-off. But when it made its low, look over to the left and you see it's a higher low. So it's still pushing up. You know, that was a big drop, but buyers continued to buy it back up, and it officially closed above here in the end of June this year, closing above. So this red zone now is a green zone. So let's make it green. Let's stretch it into the future, right? And let's just continue looking above us. Okay, so we did technically hit an new all-time high when? Thursday, July 31st, the last day of the month. Ironic, okay? You know, a lot of things happen at the month end. There could be, you know, expiration dates on options. New month starts. New month, first Friday of every month is NFP. August 1st was Friday. That's when we had NFP. So I'm just marking that all-time high again with the orange line. And so far, our most recent low from the all-time high is right here. We hit this on NFP, Friday, August the 1st. So I'm just kind of getting our range from the all-time high to where we are right now, okay? So, and we're trading, again, right in the middle of it right now. So there's our all-time high, and then our most recent range pullback from the all-time high is right there. And we're trading, again, right in the middle. So we might get some consolidation. We might get another push to the upside, or sellers will come in and maybe push it down. But we got some significant body candles that we can do some analysis on. Okay, is there another maybe zone in the market that we can look at? I'm looking right here. On these daily candles, there was a lot of resistance at this time. Okay, you can see when it came up, it went back down. Came up, it went back down. It came up, it impulsively broke out of there and closed right in it again. And then finally, we got a body that physically closed above it. So therefore, we can make that zone red to green, stretch it into the future. Okay, so that's a block below us. This block is, you know, above this one. If it ever comes back and pulls back inside here, maybe it might make that higher low support and continue to go up. However, if the sellers close below there, might invert it red, and then they take this out, they take out that low, and then we're driving back down to here, okay? We're nowhere near that, so we don't have to really entertain that zone as of now. Is there another maybe zone in the market that we can clearly see? I'm looking at this zone specifically. Right here where it's kind of consolidating in that flag and continuing to push up. I can see when it came in here, it went back up. That bearish body candle kind of closed right at it or below it. And then we had that push down. And look at where we're trading right now. We're trading right inside here today, okay? I'm going to base this off of this big bearish all-time high candle. So I'm still going to make this zone red, okay? And it's showing us that we are a little doji daily candle following yesterday's massive bullish engulfing candle. Wow. Okay. So yesterday was some serious buying power in the market that engulfed everything. So we're kind of just cooling off here. We might break out of here and drive up today. However, sellers could pull this down and come back down lower. Now, one thing that we got to do is yesterday's massive bullish engulfing candle is grab the Fibonacci tool that we just modified from the opening price of yesterday to the closing price. And then I want to physically find now 50% zone of yesterday's volume. So what I'm going to do is I'm going to grab this zone that I originally had and put it where right up here. Okay, I'm going to go with more of yesterday's volume as fresh volume, strong volume. So that's representing right there. 50% of it is right there. There's my yellow line, point of interest, and I got my zone. Once I do all that, I can get rid of the Fibonacci, and I've got some points of interest. Okay. And then also where the close of Friday, where we opened on Monday. That's also a very important opening in the market right there. Okay, so got a few levels below me. Got some points of interest. Let's follow yesterday's volume. Okay, coming off of a Friday weekend, Monday pumped all the way up, and it physically engulfed it. Okay, and look at where it closed. Did it close? It closed right at the high. Okay, there's barely a wick. Okay, so now what we got to do is follow the volume. We closed there strong yesterday. Okay, even if this was like a 5-minute candle, we closed right at the high. You know, it didn't open, ignited, and push right up. It opened, and then there was initially bearish. Okay, it's in this red zone. It came down bearish. We made a low of the day already. Okay, it's already established. We could revisit this, but right now we've already made it. Okay, so what I can do with my red zone here, I could just move it right up to that purple line right there. Okay, to keep it nice and clean. 23,215 is our low of the day. When it came down there, did we come all the way down, retrace all the way into this? No. I'm going to place an alert in here for sometime this week. If it comes in there, that might be a good opportunity to look for a buy. On NASDAQ, 23,007, James Bond, right in there. We came down today, found a higher low, came back to the opening position, and it pushed out where it made so far a high of the day. It's got limited volume right now. It's not a big daily candle compared to yesterday. This could be just, it's cooling off until Wall Street market opens up, and then we'll get bigger volume. It could continue to push to the upside, or it could sell back down. Okay, if let's go bullish scenario. If we continue to come up to the highest point of the day and we break out, where could we go? Okay, so what I'm going to do with that red box is just come down, clean it up right to the highest point of the day. Let's say, for example, we start breaking out bullish, bullish, bullish. Okay, what I want to do now is, this was a big bearish body candle that engulfed quite a few days behind us off of that all-time high. Okay, so again, now what I'm going to do is grab my Fibonacci from the opening of that bearish body to the closing of that bearish body. Now I'm finding 50% right there. If we do in fact drive up there today, we might find some resistance there, but we also have to acknowledge that there's a bearish zone right in there. Okay, and right now, this zone that we're trading in, I'm going to make it neutral. Okay, I'm just going to make it neutral. Just going to make it, we're neither bullish or bearish in here, but we have a bear zone above us. That's 50% the point of control off of that all-time high and closing below. And we also have this big bullish zone that's representing yesterday's 50% point of control. And right now you see how the market is just consolidating. Are we going to attempt to come back in here? If we do break out of this red zone and we're pulling bullish, 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 let's mark these bodies right there with a yellow line. And then if we do fill up, we're filling up to the all-time high wick. If we do break out new all-time high territory, this is where you got to do your own physical analysis up here. This is called price discovery. So our all-time high is 23,730. You can go in 100 pip increments, like to whole numbers, to 800. You can go to 900, right? You can go to the next big one, 24 karat, 24,000. I would go maybe, 50 pips, 25 pips above, like 24.25. And then 25 pips below at 23,975 with the main point of interest 24,000. I would place a red block up there if it can get up there. That might be where there's a block of resistance at 24,000, that psychological auction number up there. Okay, we're nowhere near that right now, so we don't have to really entertain that. Okay, right now what we got to do is focus on our daily spin top doji candle right now. Okay, so not much volume, not much range. This daily candle 215 to 305, 90 pip range, not huge for a daily candle, but more volume will start to come in as we lead into Wall Street. Okay, now let's break this daily candle down into the 4-hour. We're not going to show much because the daily candle is not even doing much, but we can look at the overall 4-hour move. So we were making this higher high, higher low, higher high, higher low, all-time high. We hit it on July 31st, 2 a.m. coming from London, going into New York. Then Thursday, we had some news coming in the market. We continued to push down where it made a bottom over here Friday. So this was after NFP and started to move back up this week. Monday, that big bullish daily candle. But look at the 4-hour candles, how they're just kind of consolidating. Okay, so the 4 hours are accumulating. If you want to box this entire 4-hour range, it's just in between our daily, the purple lines. That's the 4-hour consolidated market. You can see it's 4 hours, 8 hours, 12 hours, 16, 20 hours. It might continue to consolidate in here, but eventually it might make a move to break out of here, right? Or it might make a bearish move to come back down, right? Or it could just continue to accumulate in here. And then also we got to watch for false fake outs. It could come up here and break and it get rejected and go back down, okay? So you also got to watch for fake out. Always. You always got to watch out for fake outs every day when you're trading on all time frames, not just on 4-hour candles, on anything, okay? But you can see how it's kind of consolidating. So if I look at the overall move, 4 hours had the big drop down, came down. We're coming right back into here, right below that red zone, okay? So can they come in here today and drop this back down, pick up here at the green box, and then we're going back up? Or will they close it below here and we drop? One thing that we can do too to help our bias is grab the Fibonacci tool, but I took all the retracements off of it. What you could do is you could swing it from this high, the all-time high, to that last recent pullback and then see where we are. I removed a lot of those significant ratios, but let's just see with what I got on mine. You see right here, the 0.5, the 618, it's kind of right in here. So we're trading right in that pocket, okay? So this could continue to maybe basically push down. On the 4 hours, you know how we developed like a bottom where we bought on gold, that double bottom? This is the first bottom. So if NASDAQ ever comes back down towards this inside here, that could be your double bottom. Okay, so if you're looking for a swing position, that might be the best opportunity to come back, break this neckline, and continue to drive up. Okay, so just like we did on the 5 minutes, you got to patiently wait. These are 4-hour candles. We might have to patiently wait for multiple days or a week for it to pull back. Maybe it's going to continue to break out of here, and we could look for continuation buys. But then when it comes back to this all-time high, that could be where, it drove all the way up there, came all the way back down. It might come all the way back up there. That might be the double top, and then they drop it maybe into this. At this point, this will be a green zone, and maybe it will come back up, okay? I just trade from zone to zone with alerts, watch on particular time frames, but you can see that the 4 hours have done nothing. They're just basically consolidating. If we go into the 1 hour, you can see exactly how they're moving on the 1 hour. We had this big bullish candle Monday, August 4th, market open. Remember how bullish it was yesterday at Wall Street? We continue to push up. We're continuing to make hourly highs. Pullbacks are higher lows, continue to go up. Hourly candles. Where was this big bearish candle? This was London. Okay, so it already made a high, came back down. We just retraced all the way back up and made another high. So the hourly candles might be developing a double top. One top from London. There's our neckline. Second top right now at 9 a.m. And then we could be, 8 a.m. And then with Wall Street, we might technically come down. Maybe it might be a selling day today to sell back down into this green zone at 23,000. Okay, that's a possibility. However, it could also pick higher lows and continue driving back up into this red zone up here. Okay, so that's how we're moving on our hourly. It's still very congested in here. If we look on the 5 minutes, there might be some opportunities to scalp, like how that move came down, bottom came back up. We're trading a little bit volatile. Again, it's inside here now. Oops. Okay, so this is how it looks on the 5 minutes now. We're in this tight range. Okay, we're in this 4-hour block. What we're going to add now is our daily bar indicator. We're going into 9 a.m. right now. So there's our daily bar indicator. You remember where we opened right there? We initially came down, made a low of the day. We came back up, we made a high of the day, and we've been rejected, and we're coming back down to the opening price right prior to Wall Street, okay? So it could be a choppy day today. Could be a choppy day. Maybe today might be just a consolidating day. It could be like one of these spin top days. They're frustrating to trade, so just understand that there's not always going to be trending volume, and some days are tough to trade. This could be one of those days, unless we see a move coming out of Wall Street to help maybe make some new higher highs, higher lows, or some lower lows and lower highs and push down. But we're just trading in this range. Now as a scalper, what I'm looking at is that big bearish candle coming down. Can we identify about 50% of that? Maybe we see a point of control right there. So we kind of got to see buyers maybe get back above here in order to break out for the high of the day. If sellers keep lowering this, we might break the opening position and then fill our low wick and maybe break for a new low of the day and continue. Maybe we'll flip today's bullish spin top into a bearish pin bar and start coming down. Okay, adding some EMAs now. EMA 9 is right here, the green line. EMA 200 is here, this purple line. We'll leave NASDAQ to the left, right over here, and then we'll do US 30, Dow Jones in just a moment. Let's just briefly look at what gold is doing. Okay, so gold, if you guys are still in it, this is where possibly you could get a golden crossover where the 9 crosses above the 200 with maybe some pullbacks and continue driving. So you see how we held the yellow line, still making higher lows and higher highs, and it's still technically driving. If gold closes above this red box, then you make it green. Okay, so I'm no longer in that, but if you guys are, just measuring that move, okay, that's a total now of 155 pips. Okay, so unbelievable. Okay, if you guys are still holding that gold move, wow. Okay, so if this bar in the next 5 minutes closes above this red box, go through the motions and flip the red box to green, because you could get some further upside momentum, and you could also technically have maybe a golden crossover where the 9 crosses over that 200 and continues to push. We're not too far from flipping today's daily candle into a bullish candle. Holy shit, like that would be massive on gold. Wow. Okay, now let's finish up on US 30. Okay, so NASDAQ is pretty choppy. I don't like trading when it looks like this, where you have kind of small body candles. You got long lower wicks, you got long upper wicks, pure consolidation, pure range, indecision. That's where you trade small, speculate, feeler trades. Right now, maybe wait for market open to dictate a move, okay? You don't need to rush in trades, especially when we've made a good trade. Maybe some of you guys are at your daily goal. Don't go start trading this shit now and start giving back, okay? Wait for good volume. Be selective with what you're trading, okay? Look for the best quality volume. If there's good quality volume, then you might get some quality trades. If there's some shitty volume, then don't be surprised if you're getting yourself into some shitty trading opportunities. Quality matters, okay? Let's do now Dow Jones on the daily. So this is completely different from NASDAQ. This is a basket case of everything, has all sectors. The completely way how it's weighted is completely different than the S&P 500 and NASDAQ. Okay, this is kind of price weighted by the price tag of the security, with the highest price being the number one security that gets the most weight. S&P and NASDAQ are market cap ranked with how many shares are available. Let's say, for example, Apple, how many outstanding shares, you multiply it by Apple's share price, and that will give you its market cap. And then market caps are ranked from number 1 to all the way down to NAS100 is 100. S&P 500 is ranked from number 1 to 500. And they get bumped out. There's reshuffling, there's rebalancing every quarter. These indices get rebalanced. If there's an underperforming security, they get kicked out, and a new top performing security will get pushed, will get added in. Okay, so it's kind of like only the strong survive. Basically, that type of mentality. If you're weak, you get taken out of that index, and then you lose that exposure. Okay, a lot of these securities in the S&P 500 and NASDAQ are heavily exposed, and like pension funds are forced to buy these securities, you know, because your pension might be S&P 500. So you'll get exposure of everything, whether you like it or not. That's the weighted system. Okay, so let's now start looking at Dow on the daily. We can see it had an all-time high in the past over here. Okay, so when was it? It was early December 2024, going into the new year. We revisited the all-time high again in January, February of this year, double top, and then they dropped it back down. And again, if you stretch this into the future, you probably would have been expecting it to come back in July. It did come in there and push back down, and we revisited it again end of July, early August, and push back down. So get in the habit of stretching that red block into the future. Go as far as you want to go, okay? It's a static block in the market. The only thing that is dynamic is the variable volume. The volume is the only thing moving. So if the volume closes above, we make the static zone green. If the volume is below it, it's still red, okay? Let's just mark our all-time high. Okay, we just recently hit the all-time high right there. All-time high is 45,155. Okay, hit our all-time high up there. What I can do with the red zone is just bring it up to the all-time high, and then I can see exactly the specific date we hit the all-time high was July 28, start of the week, Monday. Since then, you can see there's been a lot of selling pressure pushing down. We had the big bullish day yesterday. Are we going to continue to come back up, or are we going to push back down? So it looks pretty similar to NASDAQ, the chart here. Good morning, Sonia. Welcome. Scotty, welcome. Good morning. Thanks for joining, brother. Okay, guys. So this was a point of interest. You see, when we hit that previous all-time high, it came back down and then came back up. So can we just maybe identify this area or point of interest with a yellow line? Okay, as a daily point of interest. See, when it came down, it held right there, body closed, body open. There was an initial push down, but the volume closed above, and then we continued to push into what took us to that all-time high. And since then, we've pushed. On Friday, NFP last week, we did close below it, okay? But notice how we engulfed it yesterday and came right back in here. So this yellow line could still be support going forward. And notice how it's just a little bit above yesterday's volume. So if I get my indicator, you know, my, not indicator, my tool, my Fibonacci tool right here, and I go from the opening price of yesterday to the closing price, see where I have that yellow line at those bodies? Okay, it's inside my zone. So what I could do is maybe I want to move that yellow line to 50% of yesterday's volume. I know I'm moving it off of those bodies, but my zone will take care of those bodies. So there's my zone of yesterday's bullish volume, that point of control, making it green so you guys can see it's point of control, bullish volume. And then when I go backwards, you see how I get a little bit of those bodies and a little bit of that wick. Okay, so if we pull back into here, that might be a good opportunity to look for maybe a pullback buy. Whether you're a daily trader, a 4-hour trader, it might be a swing position. Okay. Also for us as intraday traders and scalpers, if a 15-minute volume, 5-minute volume comes in there too, I look for maybe a 5-minute double bottom. I look for clues to give me that I'm buying in a daily point of control, but I look for my 5-minute clues, things like that. Okay, but I want to acknowledge that that could be a good supporting area. Maybe they broke it, but look at how what happened on Friday. So Friday made that low all the way down there. So if we're now making from our all-time high to our range low, our other orange line down there, Lowest point we hit from the all-time high is right there, 43,343. It came right back up. Look at where it closed. Then they gapped the market down yesterday, okay, over the weekend. We closed right there on Friday. They gapped it down. And it was initially bearish, where it made a higher low above there. And then we came all the way up. Look how engulfing yesterday's bullish Dow volume was. Engulfing, cut right through 50% of Friday's bearish candle, cut right through it, came up to that opening position and engulfed it. And look at where it closed. There's no wick on yesterday's candle. Holy shit. So it closed very strong. So they're trying everything to bring this thing back down, okay? So we have to acknowledge some key critical points of interest right here. Have to acknowledge this area. We had a body close, body open, and it's representing today's basically lowest point of the day. Okay, so let's go purple for today's low of the day right there. And it's coming into these bodies of interest. We continue to push up and close right at the high. So where did we close yesterday and where did we open? Right there. Have a yellow line. That's a critical daily point of interest. When we opened, we were initially bullish today on the Dow. Okay, it made a new higher high right there. Purple line. And then what happened since then? They pushed it down back to the opening position. Bears and sellers took it down, right down here, the lowest point of the day. It's by that body and that body, and it's still holding up, coming back up. But we still have this bearish volume. We gotta continue to flip this, and then we can turn bullish. And if we do, we're driving maybe to next point of interest, where that body opened and the previous one closed, right up there. I could also find, 50% of that candle. It's right around here. So if we can break out, we could drive considerably up there. Here's another inside there. You got a daily candle and a daily candle open and close. Right there, I would place another line. Okay, 44,400, and then we can get up to maybe 44,525. Notice our high of the day is 44,325. Online auction. 25, 50, 75, 100, 125, 150, 175, 200. Trading is an online auction, okay? Know your psychological levels and those psychological numbers, okay? So we got some inside consolidation, okay? We're following a very bullish engulfed bar. It's cooling off. Maybe it will continue to move up bullish, but also sellers were also got this big daily push, weekly push down, that it could continue to come back down today, okay? And then if it trades in this green box, we see if the buyers are there to bring it back up. If we lose this, then maybe it will come back down to test Friday's close or Monday's open, somewhere around here. I know there's gaps in the market, so whenever I place a yellow line at the body close, see, I could have placed it at Friday's close, I could have placed it at Monday's open, or I could go right in the middle and just be psychological 50%. So I'm not at Friday's close exactly. I'm not at the gap down open. I'm right there, right in the middle. Okay. And that kind of satisfies everything down there if we have to come back down there. But right now, maybe we're just consolidating and maybe to move back up. Okay. So notice this, guys, too. This was a double top with the liquidity grab. One top, there's our neckline. Okay, second top, you see the body. There's the second top. And above us is the liquidity grab to the all-time high. So keep it consistent with the bodies. There's your double top M. We actually broke on Friday, closed below. Okay, so if we came up on Monday and we retested this was a red zone, it got a wick, we would be selling down right now. Like the market would be selling off. However, when it came into this, look how strong the buyers were, okay? So this could be considered a fake out down here on Friday, and we're still holding, above this green zone. So technically, we could be building like a second bottom to come back up. This is the second bottom here with the fake out liquidity grab, just like on a 5-minute setup. Same shit. When a 5-minute candle breaks, and then it gets engulfed by the next 5-minute candle, it could continue to build at this level, and then it looks like they just swept the liquidity, and we could be building back to the upside. So what we got to watch today for is if the buyers can continue to push up and flip today's bearish candle right now. Doesn't have much room to flip it, but it can. We could be driving back up bullish today for our next push up, okay? But we still have this bear volume, okay, to get through. Now let's go from daily to 4 hour, okay, because it's 9:15. So we had that big drop down, lower lows, lower highs, lower lows, all the way down there. We're coming back up, but remember what it could be. It could be staircases coming up and an elevator coming down. Okay, so we really got to watch. Right now above us on these 4 hour candles is, look at the top wicks. I've got a lower high, and a lower high, and a lower high. So technically we're sloping down, and we do have lower lows and lower lows and a new lower low. But we're trading in between the daily range. The purple line is the low. This purple line is the high. Okay, so if this 4 hour candle closes below, we might push back down unless buyers can bring it back up. So right now, still consolidating. We're in a consolidated phase. We're at the neckline on the 4 hour. So if I was to consolidate this entire range, like right here, this is the neckline. You know, just like what we saw in those 5 minutes on that gold buy. This is the neckline. We came down, came all the way back up. We're trading in the neckline. It's accumulating. So 3 moves. It's going to continue to trade in this zone and continue to accumulate. You're welcome to trade in there if you want. Or we'll see maybe a push, close, retest of this, and then we're driving and we flip the daily candle. Or the daily candle will close, the 4 hour volume will close below here, retest this, and we're dropping, and we'll see a bearish daily candle coming into that daily point of control. We also got to watch for fake outs too. You could see a fake out. Okay, so lots to watch for. Today's an interesting day. Very interesting. On the hourly, see how the hourly candles are trading real sloppy, barcoding. They're bearish, bullish, bearish, bullish, bearish. No real direction, no real trend right now. It's only what we can base off of is this double bottom down here. Hourly, one bottom, came back up neckline, second bottom, higher lows, volume close above, and you got your big bullish move, just like on gold on the 5 minutes. But this is how it looks on the hourly. And then we came back in here. We're struggling to break above here, and now they're pushing it back down. Okay, so I'm just going to get rid of that consolidated zone so we can watch in here. So we're still, you know, we're still moving down bearish. Okay, if we go with this overall trend, guys, on the hourly, we're pushing down that whole thing. Now, those lower lows, lower highs, lower low, lower high, bottom down. We're coming back up. That is a counter trade. Like, it's very nice, looks bullish, but we're coming back in here. They could drop this thing back down, right? And then get a double bottom or maybe a higher low inside here and then push it back up. Okay, I could close below here, retest this, and continue to drop down. So today is one of those days. It's those tough days. We got to be patient. We got to be disciplined. Today might be one of those slow days that, you know, are setting up for what is today, Tuesday, for tomorrow, midweek continuation or midweek reversal. How many times have I talked about that? Okay, today is Tuesday, so we got to pay attention to these things. This could dictate how we move the rest of the week. Okay, and there could be a lot of accumulation today. So this is how it looks on the 5 minutes. For scalping, okay? So key areas on the 5 minutes, like how can we not acknowledge this area? Where it came down, kind of bottomed out right there, went back up. Came down, double bottomed right there, went back up. Closing below there, see the red line now, it's acting as resistance. So I'll keep that in mind. What we'll do is we'll add our daily bar indicator. So you guys remember our opening position was right here. 6 p.m. Right there was our opening position. It had that spike up where we pushed to the highest point of the day right there at 8:45 when the futures opened up. So we opened, we hit the high of the day, and we've been coming down bearish where it just made the low of the day at 6:30 a.m. Eastern, and now we're coming right back up. So looking at these 5 minute candles, like right here, we got a little bit maybe of couple bottoms right there. Okay, so I'm just going to draw a 5 minute green zone right there. I can see at 6:30 a.m. they dropped it, made the low of the day. See where it closed. Next bar was a bullish engulfing bar. We came back down, held higher low, pushed back up there. We've been coming right back down into that green zone. It pushed back up, back down, kind of trading at this green zone. Will it continue to build to break above this red line, and maybe we'll come back up? And then look, this could be a bigger double bottom. This is one bottom. There's your big neckline at the daily point of interest. We're coming down. This could be considered a second bottom. Just like yesterday's Wall Street market open. Remember, we were making the second bottom, and then it just blew up out of the gate. Similar pattern today, unless they fake out the market, like they come up like this and then drop it down. Okay, so we got to watch for volume to maybe basically start to close maybe above this red line. Okay, and we'll add some EMAs 9. We're below the 9. EMA 200 are kind of together. It's just crossed below it. So this technically is called a death cross, where the 9 crosses below the 200. So this could be bearish. But let's see if we break, and then what they do at the low of the day. Will they break for a new low of the day? Will it be a higher low? Will it come back up? Lots to consider. We're about 10 minutes away from Wall Street market open. So we got US 30 on the right side. We have NASDAQ over here on the left side. 10 minutes to go. So if you guys need to go to the bathroom, grab a drink, this is probably the time. Welcome, guys, everyone on YouTube. Thank you, guys. If you guys can hit the likes, if you guys do appreciate this analysis, it does help us out. We're giving a giveaway, guys. If we can get to 300 likes today, we're giving 1 full month of the SST Trade Ideas to a lucky winner on YouTube. And we really want to give that away, but we need 300 likes. Juby, good morning. Welcome. Okay, and just looking at gold. Wow. Okay, did you guys flip the red zone green? Don't wait for me to do this. I'm getting old. I'm starting to forget a lot of things. Okay, see how, now stretch these zones into the future. We may revisit these at another time today, and could be possible buy opportunities off of these. Holy, anyone running this thing? 185 pips now. Wow, Red, you're running that? Congratulations, man. That's a big move, boss. Nice one. Still in half size. Amazing. Wow. Good job, guys. Okay, so our next daily position is the opening price of gold at 3373 if it gets all the way up there. Wow. Okay. And then if you're looking for like a pullback, if it pulls back into that green zone, that might be your pullback entry to go back in, right? Holy. Gold is trading unbelievably lately. Normally gold is the choppy one, and NASDAQ and US 30 are cleaner. Lately, gold has taken over the spotlight. Okay, guys. I'm just making sure, doing some housekeeping here. I was trading gold prior. Okay, so now if I'm switching over to US 30 and NASDAQ, completely different indices, different sizing, contract, lot sizing. So I have to make my adjustments. I don't want to make any mental mistakes at market open. I suggest you guys do too. Don't make these mental mistakes. You know, they're costly. We've all done them before. We've all done them. Where we think we're buying and we actually hit the sell button, where we think we're in a micro size and we're actually in a standard size. And then a lot of things can happen. So this is where part of my daily routine, anytime I'm getting ready to go into a market or to look for trades, I make sure I look at my spreads. I make sure I look at my lot sizing. I make sure I'm doing everything properly, okay? This is not the time to make mental mistakes. Did we catch any fish when I went fishing, or are you talking for? We caught some big fish today with gold. Big pickerel, not a pickerel. It was a big pickerel. So, not a pickerel, but we caught some big. We caught our stringer full, our daily limit of pickerels. 100 guys. This might go 200 pips if you guys are holding. Holy shit. That's 200 pips. My goodness. If it goes to that next daily position, you guys should be locking in 210, 220 pips up there. Wow. Okay. Big squeeze. Holy, he's got some big words. Here at 843, this is from Trump. This is not me. Quote, quote, this is Trump. The leaders of NATO do whatever I want. Trump ends remarks on CNBC. Holy shit. This guy, man. Yep. Okay, but guys, we're going to I know it sucks. Gold looks beautiful, but just keep in mind for pullbacks. Like what I normally do is place an alert in one of these zones. Okay, you don't have to jump in and just buy it, but you're alerted if it comes back there for a potential pullback. So see how I just placed that red line in that green zone? I'm going to right click it, add my alert. So if I walk away from my computer, I'll get alerted on my mobile or at my trade station, wherever I am. If I have my laptop with me, I'll get alerted and maybe I could buy a pullback. Either there, maybe I'll place an alert at that yellow line, and then I allow the volume to come to me. And when it comes to me, I don't just jump in and go in. I look for confluence. I look for bias. I look for rejections. I look for bullish engulfing candles. I look for double bottoms. I look for all of the things we looked for when we took that original trade. Okay, but now let's focus on NASDAQ and US 30. Let me just look what's going on in the pre-market right now. See any specific names, anything unusual going on? Everything is around 0.5% green, 1% green. Nothing big so far. Only Palantir. So Palantir Technologies is up 7% in the pre-market from their exceptional earnings yesterday in the after hours. So they are up 7% right now. SMCI is up 1.5%. They have earnings as well. But everything else is about like 0.25% green, 0.5% green, so very flat except for Palantir so far, okay? And that's why we're seeing like a flat market right now. But things will open up. News-wise, let's just go over, refresh in case someone's joining us. Do we have any news at 9:45, so 15 minutes after Wall Street market opens up? We have U.S. Final Services PMI. And then, guys, do not forget, 10 a.m. This is like right when we're wrapping up a call. Dave will be doing Post New York with you guys after. So if you guys on YouTube want to join the team, you guys can join live sessions, follow up with Dave and with the trade signals and the education, and be in the Discord with all of the members. But we have ISM Services PMI. Okay, so this one is more of a percentage, kind of like above 50 or below 50. Above 50 indicates industry is expanding, good industry growth. If it's below 50, it indicates industry is contracting or slowly shrinking, right? So what is their forecast? The last ISM Services previous month was 50.8. So the actual number was showing expansion above 50. Look at their forecast. So they're showing an expanding market of 51.5. So that's 1.3 points above last month, showing 1.3 points of increased expansion. We'll see when the actual numbers come out. If the number is 51.5 or higher, then that would be good for the US dollar. That would maybe be where the gold trade we're in starts to see some selling pressure. And it's already pushing over 200 pips and reaching a daily level. So just keep that in mind. However, if this number comes out lower than 51.5 and it's lower than 50, for example, 49.9 or 49.5, that would be kind of like 2 points below their forecast and shows dramatic contraction in the industry. That would be bad for the US dollar, and maybe we'll have gold continue to pump after maybe some slight pullbacks. So keep that in mind. And that is a high impact folder, red folder. Okay, so let's now watch We got 45 seconds to go, and we're going to have market open. Again, have rules. Everybody has rules. Some traders trade right away. The first couple minutes, they're watching the 1 minute candles. We're going to stick with waiting for a 5 minute candle to close. Yesterday, we waited for a 5 minute candle close, and there was an explosion in the market that caused that bullish, and we were waiting for pullbacks, and we never received the pullback during that session. So I'm going to stick with those rules. If you guys want, on one of these sessions, I'll say I'm going to go into the 1 minutes, and we'll follow the 1 minutes. Let's do that for tomorrow. For today, let's just continue to stay with the fives. And then tomorrow, remind me, tomorrow we're going to go into the 1 minutes on Wall Street market open. We'll follow the first 5 single minutes when market opens, and maybe I'll trade a couple of those and we'll see how it goes. Okay. But for today, we're watching fives. Okay. So we closed below US NASDAQ on that daily position. They just dropped it down, came back, caught a wick, coming back up. Remember, we still got to get above 50% of that bearish candle. We still have this red line above us on US 30. So just let the markets do its thing. It's got a little bit of volatility. You can pick a direction if you want right now, but we are pushing down. So Palantir reached an all-time high at $172 right now. So we're getting a little bit of a sell-off on NASDAQ tech, and we're holding steady with US 30 right over here. So that's our daily low right there, that purple line. So it just broke for a new low. Will they grab liquidity down there, come back up, or will this 5 minute bar close below that daily low and have continuation of more selling momentum? This is the first 1 minute, mind you, okay? It's still very early. Okay, so these are two different indices. Remember that, okay? They don't always move in tandem. NASDAQ is bearish, and you see US 30 is creating a little bit of bullish momentum. Okay, so we've taken out the lowest point of the day. Let's keep that in mind, okay? So we got a little bit of a liquidity grab where they took out the lowest point of the day. Will it come back up? Will it close below there? Okay, we're making that second bottom on US 30. First bottom, there's the big neckline. Second bottom, you can see how it looks like a W curling up. I'm waiting for the first 5 minute body to close. So I got to continue to wait 3 more minutes. I know it sucks, believe me. But it's better to wait than just impulsively trade. Quick scalps, Scotty, yep, if you're doing quick scalps, I understand. Guys, Eris Mining is up 4.3%. I'm doing good on that one, on my swing trade. It's up $10.25 right now, Canadian. We kind of reminded you of this security. So I'm in an accumulation swing. I have 2,000 shares of it. I was looking for a 5-10% swing on it. Wow, Palantir is up almost 10% to $175. Okay. No, Danny, I'm not pumping to dump. I told you, when I get my 5%, I'm out. I wouldn't pump and dump on you guys. I'm not Donald Trump. DCY, thanks, Uncle Ron. Hook 25 pips on gold like yesterday's KFC. Time for dinner. Oh, man. Good. Get that fried chicken. The coleslaw. Don't forget that coleslaw from KFC. And that macaroni salad. Their gravy is the best on their fries. KFC gravy, Scotty, you know that's where it's at. Yeah, I could drink that stuff. Okay, so we're approaching 1 more minute, guys. Okay, so you remember, it opened, it was initially bullish, came into 50% of that bearish candle. I'm talking for NASDAQ, came all the way down bearish, took out the low of the day, coming back up, okay, but we still have this bearish volume. US 30 opened, was initially bearish, broke, low wick, so it popped, beautiful, Okay, but let's see where it can close. Okay, and then we got to follow the last 30 seconds going into the close. Okay, so see how the sellers now are absorbing those buyers. Okay, so what's the first thing we're going to do is we're going to figure out where 50% or point of control of this first 5-minute volume is. And they're doing the opposite. US 30 is bullish while NASDAQ is bearish right now. Okay, so will the sellers close it below that low of the day and possibly continue to push it down? Okay, so here's the close. I'm going to need you guys to help me out to do 50% because I can only do so much here. There's 2 securities. Okay, there's the close. I'm going with NASDAQ first. Open, close, 50% is right there. If we pull back into this, we might be selling that block. Okay, right there. Okay, it hasn't pulled back in. What about the Dow candle? Okay, right there. Where's 50%? Right about there. Point of control of that body. Okay. Green. Okay, they're 2 opposite. Look at NASDAQ, how it's coming up for the possible retest. Okay, it's coming right in there. Let's see if it gets rejected. Okay, cutting right through there. Okay, so it's traded into it. Got rejected so far out of it. Okay, might come back in it. Holy. And then this is the double top, official double top of right there of US 30. Double top right below that highest point of the day. Look at the big rejection right at that point of control on NASDAQ. Okay, so it came right in there as I was doing that red box. See how they rejected it back out? This could turn into a bearish pin bar or a shooting star, and they continue to push this thing down. Okay, and look at the W on US 30. Down, 1 bottom, told you neckline, 2nd bottom. Are we going to get a breakout at the and then get to the high of the day and get up higher, or are they going to get to the high of the day and then bring it back down? So we could be waiting for pullback buys on US 30, and man, you see that 50% rule, Samuel? It's pretty crazy. And when you go into the 1 minutes, you can see how it came right in, elevator down, came back in, but the 1 minutes now are creating a double bottom. Look at the 1 minutes closing in 10 seconds. Watch, guys. Came down, back up in that red zone, back down, coming back in. Now they rejected it back down. If it can close above here, we could break out of here. 1 minute candles are driving. That's why sometimes I love trading 1 minute candles on market open. Sometimes they're cleaner than 5 minutes, to tell you the truth. Okay, so we're still waiting here. Still are now trading back in there. We don't have a 5-minute body closing above here as of yet. Okay, we could watch a 1-minute body close. $30 seconds to go on this. So it might close above. So that's a double bottom on 1 minute. Came down, broke the low of the day, came back up. 50% of that bearish 5-minute candle came back down, double bottom. Now we're breaking out on NASDAQ, holding. Let's see if that body can close. If it can close, I'm going to just, I can't change that color of that zone because that's still representing that 5-minute candle. But look at it. It could be bullish engulfing in the next 2 minutes and closing above that daily position. We could continue to drive up on this and maybe wait for a possible pullback on that US 30, okay? If we're watching the 1 minute candle, you could watch for maybe a pullback or maybe just like a continuation drive out here. I think it needs to pull back and retest inside here. So I'm going to wait for that 5-minute candle to close because I only have 90 seconds to go on it. Wow, US 30, double bottom. Guys, clean pattern trading. Very clean. The daily candle might flip into a hammer, breaking the highest point of the day. What's gold doing? Holy shit. Look at gold. Oh my God, guys. It's gonna flip the daily candle. My God. Okay, let's watch the close of this. Wow, guys. Unbelievable market opens. Comex was unbelievable. Wall Street the last 2 days has been pretty good. Holy. Some of you guys are still holding that gold trade. God bless you guys. US 30 is moving, yep. Okay, so did it tag the daily high? Not yet. Coming down. Let's see. We got maybe a 5-minute bullish engulfing candle on NASDAQ. If it comes back into this zone, maybe we could look for buys off of that. I'm going to assume it's going to close above here. So I'm just making my zone green. And then we had that higher high breakout of that W pattern, maybe a pullback. Maybe we got to buy a pullback on US 30. Maybe buy a pullback on NASDAQ. Or it could just close above here right at that daily and just drive. Okay, so get ready on both of these securities. It's an ignited candle. It's opened, pulled back, okay, coming down, bearish. Will it come all the way back down in the green zone, or will it be a shallow pullback with a higher low? US 30, okay, did close above. Please, guys, flip your zone red to green momentarily. Okay. Still holding, okay. Okay, came up there, rejecting back down, coming back up. I'm going to go in a buy on US 30. I'm going to place my stop loss below the body that started that move, and just to see if we can break out for a new high of the day with this volume intact. And if we can break out above this purple line, maybe we got some 5-minute resistance right over into here. 44,375. Rejected. Okay, so we got to come back, trade in this green zone. Yep, and NASDAQ is getting ignited too. Might flip this bullish spin top candle a little bit more bullish above here. Okay, US 30 is retesting. US news in 20 minutes, yes. See if we can get 50% right here, a hold. My stop loss is just below this body here. Okay, I'm going to get stopped out here. Yeah, I got faked out of that high point of the day there. Still holding, see if we can get a higher low in here. NASDAQ has that little spin top candle right at this daily point of interest. Two more minutes to go. Yeah, I'm stopped out. Okay, that's it. Stopped out there. I'll wait for this move. So pullback entry probably down in here. So it was a little bit of a fake out up there, coming back down. Let's see if we can regain this point of control, come back up. I'm still watching. I'm still going to watch if Dow is bullish today. What's going on here? The U.S. approves OpenAI, Google, and Anthropic to the federal AI vendor list. NASDAQ is holding, could break out. I'm going to wait for that body to close since we're at 90 seconds. So I got stopped out of that, but I'm still bullish on US 30. Just got to wait for more volume to accumulate and come back up here, and then maybe get that breakout, okay? Just got to wait for a little bit more. I got stopped out, okay? But I'm still watching this. I still think US 30 is bullish. We're still in this range, you know, still holding this resistance right here. We're trading right at the neckline, but I want to see kind of if it can come back down into Wall Street's 5-minute bullish candle that started this whole move. If it can come back in here and respect this. And that's where the 9 EMA is, and our 200 is just below it. And then if you're trading in here, you're trading inside these zones. Okay, so you got to measure these moves then. Got to measure from here to there, from there to there. I'm going to stay with this. Okay, I'm staying with the volume. We're going into 9:45. We have that US low impact folder, and then 10 a.m. we have the red folder coming up. Okay, let's just continue watching this. NASDAQ kind of just settling down right here at this daily point of interest after it had that big bearish open. It was engulfed in the next 5 minutes, but kind of just trading again right at this daily position. A beautiful double bottom on US 30. Kind of when it got up to that highest point, kind of retracing back down, but let's see if it can hold, continue to come back up, or retest this green zone. I think NASDAQ might be ready. Yeah, I'm going to go in NASDAQ one more. This is going to be maybe my final trade today. See if NASDAQ can get up to that high of the day. I like that. I like that ignited open, filling those wicks. Maybe with Wall Street volume can clear this area. I'm going to place my stop loss below the 200 EMA, below that green zone there. And I know that if we can get up to that red line, that's about 22 pips, but back up to the high of the day, it could be about 40 pips on NASDAQ, okay? So I'm in a NASDAQ buy. It looks better. Yeah, you're absolutely correct. I like that bullish ignited candle, that little spin top that held at that daily position, now coming right back up, okay? It's a nice bullish ignited candle, pushing up, clearing that wick right there. Get up to the red line I have right there is 50% of that bearish candle that took that entire leg down. So that could be resistance at 23,289, 290 up there. US 30 looks like it could be barcoding, bullish, bearish, bullish, but we need more bullish volume closing above here in order to get that daily high breakout. Okay, so we're getting up to that red line. Remember what I said, that's about 20 pips to that red line, 22, 23. And if we can break out a little bit, about 30, and then the highest point of the day could be about approximately 40 pips. So if we can close with volume above that red line too, we could possibly build off of that and continue to get up there. But if we fail to break that, or it could be selling pressure coming back down, okay? So just keep that in mind. I haven't reduced my risk as of yet. We still have 2.5 minutes to go on this candle. That's a good push. Okay, so we're right at that red line. Let's see if we can push above it. If we can close above it, that would be really, really, really beneficial to us in a buy, because then we can build off of that and possibly clear that bearish point of control on that candle and then break for a new daily high on NASDAQ. Okay, that's about 25 pips up there, guys. There we go. That's about 30 now, okay? So there I'm going to a break even at 30. Break even. Okay. And a little higher, I'm going to start to scale out, okay? Okay, so I'm at a break even NVIDIA at 180. Wow, okay? I'm going to take out 80% up there. Taking out 80% to recover my loss from US 30 a little bit there. Taking out 80% and leave 20% running with the break even. See if NASDAQ can break that high of the day. Okay, so kind of recovered my loss there with US 30 with NASDAQ. It was a nice setup. That nice bullish engulfing candle with that little inside consolidation. Notice how the blue volume held above that daily point of interest yellow line, and we opened ignited on this candle. As soon as it started filling those two tweezer top highs, that's where I bought. Okay, and it's moved up 30 pips. I took out 80% of the high just because it's near that daily point of interest, the highest point, and then I got 20% running at break even. Okay, that was to recover my loss on US 30. I don't like leaving liquidity behind. That's just me personally. And US 30 got rejected again, coming down. And we have news in approximately 10 more minutes, high impact news, okay? And that will directly affect the US dollar. So, you know, don't feel bad if you take some money out of the markets, okay? Especially right prior to high impact news. Gold is still moving, okay? Big breakout at 9:30, okay? So you see how 9:30 volume, that yellow line, is technically representing 50% of that volume. That's our opening position. Okay, so you see we broke through that. We couldn't break for the highest point of the day. They rejected it with lower high. The volume closed below that point of control of that bearish candle, and then now it opens bearish, coming right back down. So my 20% could get taken out at break even. That's why I take out 80%, guys. You know, a lot of times on these calls, I try and hold. I know NASDAQ trades a little bit slower than US 30 from what I'm used to with US 30. So when it moves up 25, 30, almost 40 pips, don't be scared to do something, especially at these highest points of the days and with our daily candle that's doesn't have much volume or range. Okay, so there's my 20% of break even right there. Okay, so I'm happy that I took out 80% at the highest point of that candle. And then now I'm out of that. Okay. And we really haven't moved much. Okay, we're still stuck in this range. You know, I'm sure that the news at 10 a.m. will start to open up things, but maybe later this afternoon, the daily candle will start to develop. US 30 kind of got shut down at the highest point. Nice double bottom, but got kind of faked out at that resistance. Didn't really close with any volume above. I was in that buy, hoping that it would close above, retest this, and drive, but sellers are there. They're shutting it down and coming possibly all the way right back down to where it started, unless this block can hold. But in trading inside here, I would avoid this, okay, until we start to either break back to the upside, or maybe today's going to be bearish and they're going to come back down at this low point and drop it, okay, with the news. Are we okay, guys? Did you guys understand why I went in the buy on NASDAQ? Okay, went off of that bullish engulfing candle, waited for it close. I waited for that spin top to close. I saw a little bit of bullish volume closing, but more importantly, the yellow line. That's what I was looking at, 23,250. That was the opening position of NASDAQ. So when I got that bullish ignited candle, as soon as it started to break those tweezer top wicks, that's when I got in and I scaled out 80% right below that highest point of the day. And then my 20% just got hit on break even. So that's that 80-20 rule. There's nothing wrong with taking out some money out of the market. I don't play the woulda, shoulda, coulda game. I play the put money in my pocket game. Okay, so if you guys are in longs from earlier this morning, 23,240, there was that liquidity grab and continuing to push up on the next bar. Guys, Eris just reached a 52-week high at $10.43 Canadian. So that's fantastic. If you guys are in that trade with SST on that gold junior mining company. Shout outs to Red for discovering that. It's up 6.12% right now, Red. Eris.to. That's I'm looking at it on the Toronto Stock Exchange. 2 days to go into earnings. It has earnings in 2 days, and it's up 6% right now, and it's trading at its 52-week high. So awesome trade, guys. Gold mining companies, okay? If gold is going up, you got to mine gold out of the earth. Have a look at these Eris, guys. We did a blog on it right over here. That's why I tell you guys, join our free blogs. You know, there's a lot of education over here. We did El Dorado Gold. And this one right over here, Eris Mining Corporation, Fundamental and Technical Overview. We did this. When did we do this? What was the date of this? This was a while back, prior to it taking off. It was July 16, over here, 2 weeks ago. Yeah. So we've been accumulating position I have over 2,000 shares. It was on a serious drop after liquidations and things like that, but good opportunity. Now we're trading at the 52-week high, and we're going into earnings in 2 days. So that's a phenomenal move, guys. There's those things, a lesson. You know, when I go to a break even, they came down, they tagged my break even, and then I watched the move running. Remember, I didn't do it with gold. I kept a little 5 pip buffer where I didn't go to the break even. I should have done that with NASDAQ as well. If I kept a little, maybe a 5 pip buffer, I probably would have still been in that 20% running trade in here too. But that's how it goes. Guys, that bearish candle closed below that point of control on that big bullish candle that started 9:30 on the first 5 minutes of Wall Street. So that's got to be a red box now, okay? You know, you just got to go through, continue. If it pulls back in here, it could get rejected and pushed back down. If we come back up and close above here, we could build some support off of this in order to come back up and take out that high of the day. Notice now that NASDAQ, that bullish volume, closed above that red line. That red line is exactly 50% of that bearish candle at 8:15, right prior to COMEX. That started that move coming down. Sorry, I'm just saying COMEX. I'm just used to saying 8:15, 8:20 COMEX. I know it has nothing to do with NASDAQ. But that now closed with a little bit of volume. So it's coming down now. But if we can get a higher low, like we got a higher low wick, we're a higher low, we're building off of that point of interest, that big bullish engulfing candle. If we get a higher low, we could continue to come up and test the high of the day. However, it could be like a double top, like kind of like a US 30. One top, okay, it came down, coming back up. This could be like a second top coming down. But if it can pick up higher lows, we could continue to build with this and come back up. Just looking now at the market and just before the news, just any big names out there. Amazon is up 2%, Google's up 1%. Palantir is up 9% off of their earnings in the after hours yesterday. Intel Corporation is up almost 5% right now. So tech is in the green. El Dorado Gold up 6%, $30.69 a share. We did a blog on El Dorado Gold. It's a great company, guys. So put these on your watch list or subscribe to our blog. It's right over here. Everyone, subscribe to it on Zoom, on YouTube, wherever you are. Come to our website, stocksnipertrading.com. Go to this blog, and you're going to get some important information on everything trading related. More importantly, there's where we did El Dorado Gold, July 22nd. El Dorado Gold is a major Canadian-based gold mining company with operations in North America. You can read all about it. And there's the Eris Mining. But, you know, if gold is going up, gold mining's got to go up as well, okay? You can do a little due diligence, do some research, and find some good companies. Now the market is pushing down, okay, with news coming. So this is the red folder news coming right now in 2 minutes. ISM services. So when we see the actual number coming out, remember, above 50 is expanding industry, good for the US dollar. Below 50 is contraction, not good for the US dollar, but also their numbers. So they're forecasting an increase from the previous month, 51.5. Let's see if they beat that or if it's not a beat, but also keep in mind, is it above or below 50? Okay, so lots to consider in 1 minute, 55 seconds. This will directly impact the US dollar. It will impact gold, and it will impact the US stock market. So let's take a look. Right now, the US dollar is pushing up, going into the news right now. I won't be taking another trade, guys. Just heads up, you know, even if there's a good setup, I got to get out of here. I got some things to do. I've already met my daily goal today with the gold. I lost a little bit with US 30, but recovered it with NASDAQ. So the US 30 and the NASDAQ was kind of a scratch, kind of a wash, kind of a break even on those. Kind of recovered my loss on that, but made a substantial amount on the gold buy. So I'm having a great day. Hopefully you guys are too. Maybe you guys hit your daily goals, trade with a smaller risk so you can keep your money in your pocket, keep compounding your account, and let's keep doing this on a daily basis. For YouTube, guys, thank you guys. I haven't checked how many likes we had or subscribers. But remember, if we get 300 likes, we'll give away a free month of trade ideas. So let's see. I'm checking right now. 291 likes. Come on, guys. 9 more likes. 293. Can I get 295? Can I get 295? Can I get 300? Come on, psychological number. Get it up. Guys, we want to give you guys a free month of SSD trade ideas. Come on. 298. Come on. 2 more people. Let's go. 300. And subscribe to the channel as well. Okay? That also helps. Oh, did we do it? Okay, get ready, guys. Here's the news, okay? We'll focus on that later. Let's watch this. If anyone can tell me the number, whoa. So watch for liquidity grab, that deep drop. Holy, okay? So that's why you got to be careful on news. Wow. Okay, so let's see the numbers. Did they release them? 50.1. So it's disappointment from the forecast. It's lower than the previous month, but they might say it's a 0.1 above 50. So it's good. Its industry is expanding, but that's still shitty. So the US dollar is dropping currently as I'm speaking. Gold is pumping right back at that daily position, pumping at the opening. This will probably take out the high of the day or test it on gold. So we just dropped down to that point of control, that zone that I had. That green box is still holding. US 30 took out the low date. Let's see if it reverses back up. But initial drop on the US dollar right when they released that, okay? You got to watch. They're very sneaky the way how they word things. It was a decrease from the forecast and the previous month, but they'll say it was 50.1, so it's above 50, so it's that 0.1 is still shows an expanding market. It's kind of welcome to the world of analysis. This is how they do it, okay? So what do we go off of? Month over month? Is it better than last month? No, it's not. Is it better than their forecast? No, it's not. Is it above 50 their ratings? Yes, it is by 0.1. So they might say, oh, it's an expanding market. You know, like Donald Trump might talk today later on this afternoon and say it's expanding, but it not really is. It's lower than the last month and it's lower than their forecast. So, you know, this is where analysts and politicians start bumping heads. Wow, guys, 315 likes. Thank you guys so much. You guys deserve, someone on YouTube today will be a winner of the 1 month membership for the Trade Ideas and Signals. So thank you guys. We do appreciate you guys. You guys are the best. Thank you for that. It means a lot to us at SSD, and we want to give back to you guys. So thank you guys for that. So these are the actual numbers coming out now. Okay, there could be revisions later on, but guys, that's it for me. I got a lot of things to do today. I hope you guys enjoyed today's session. Let's all have a break. Dave is going to take over in the next 30 minutes in the private Zoom. Guys, just prior to leaving, this is our Discord signals. Okay, we're going to get these. A winner will have these. If you want these, they're available on our plans. Also, guys, our free Telegram link, it's pinned at the top of the YouTube channel for you guys. This is our free Telegram. This is where we give you guys, all of our upcoming live sessions, our blogs, the Eris Eldorado, compounding, weekly outlooks, trade idea recaps, and trade management, show you guys how to trade with these, and other important information at SST, okay? It's all available for you guys on that free Telegram pinned at YouTube. And also, guys, visit our website, join the team. We have a lot of education. Everything we talked about today, I guarantee you there's a webinar, there's some sort of course, or there's something we've done. We have a multiple library of education with myself and Dave doing this. A lot of live sessions on a daily basis and those free blogs that I was talking about. So, guys, thank you guys so much for an amazing session. You guys are awesome. And we'll see you guys tomorrow, same time, 7 a.m. Maybe watch today how today's daily candle closes on your security. You might see a possible midweek continuation going into tomorrow or a midweek reversal. We'll do this all again tomorrow. Hit the W's in the chat if you guys had fun today. Subscribe to the channel, hit the notifications, like the channel. You guys know what to do on YouTube, and or join the team and be part of this with us. So thank you guys so much. Dale, have a fantastic day. Promillo, thank you. Samuel, have a good day. Tony, Rid, thank you. Daniela, Ephraim, have a good day, guys. SSDN, Red Clues, take care, guys. We'll see you guys tomorrow. Enjoy the rest of your day. Trade smart, trade responsible. If you hit your daily goals, there's nothing wrong with walking out of the market. Red, who draws the winner from YouTube? Do you want to draw the winner, Red? If you want, you're welcome to pick the winner, and we'll announce it tomorrow on tomorrow's call. Yeah. So Red is our moderator. He'll pick the winner out of today's session, and we'll announce it tomorrow to the lucky winner. So thank you guys so much, and have a great day today. Thank you, guys. We really do appreciate you guys. Thank you, everyone. Samuel, have an amazing day today. Thank you. Enjoy the rest of the day with Gators.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.